be joined by Amit here in a moment, and Neil within the next minute or so. But who do you guys have in terms of being the biggest winner tonight? I think Sandisk, just like what we've seen across the memory space, I'm most excited to see that report. Western Digital, I think, will also likely surprise to the upside. But then we are going to have, Applovin end up showing off their numbers. Axon, these are likely to do very well also. Amit, how are you, brother?
What's up, man? How are you?
Doing well. I can hear echo.
You can hear an echo.
Yeah. Oh, I can hear me.
You can hear you. So let's do something to change that. Okay, that should be better, I think.
Okay. No, not at all.
Not at all. Well, I can hear you. Okay, give me a second.
I can hear myself perfectly.
Okay, how about now?
No, nothing. No difference.
Okay, I'll be back in a second.
All right. Someone says he looks like a highlighter. I think that's the Robin Hood hoodie, actually. Sporting one of the greatest names in fintech. You guys, it's not just me, right? Everyone heard him? It does sound like the wrong mic. It sounds like a webcam mic or something.
Okay.
No.
Dude,
I hear myself as loud as I'm talking.
How about now?
Hello. It's getting louder.
Dude, the mic's been weird all day. I have no idea why that's happening here. What about now?
Check. No.
All right, it's your show, bro. I'll be back. I'm going to try to fix this in a second.
Are you using a different mic?
No, I'm using the same mic. Dude, I have no idea what's going on. Today's been...
Just put in headphones.
Yeah, I'm going to put in my head. Let me get my AirPods.
Okay. All right. Sorry, guys. We'll get this figured out, and then all shall be good. Dude, this is why I love the Fiscal AI team. I messaged them, and I said, guys, I cover SoFi all the time. I would appreciate if you guys put more of the SoFi metrics on their platform. I said this like a day ago. They sent me a message today. Hey, Tanner, all of the new metrics have been updated. That's why I like Fiscal AI. So let's go see if they actually did update it. This is going to be pretty embarrassing if they email me and it's not true. But they should have added all of the financial service products. Money, invest, credit card, referred loans, crypto, plus Outwork Relay. You're welcome. All right. Welcome back.
How about now? It's working, right?
It's the microphone is coming from your headphones now. I don't hear myself.
Oh, hold on. Okay, now you should go. Sorry. Today's been weird, bro.
Yeah, and it's coming in loud now.
What's going on. Anyway, I don't know what to do. This whole morning, it's been fucking weird. This should take the audio down a lot right here.
Here, let me turn off my background as well. This is not my stream anymore.
Yeah, today's the AK Media short, guys. I'm sorry. Today's an AK Media short. Okay.
Are we being joined by Neil as well?
I think so.
Okay.
I think so. Should be good now. Should be decent. If it's still bad, let me know on your end, Tanner. It's fine now.
Take it away. I want to hear about what you've been focused on today in the news. This is your show.
Okay. So obviously today's been a really interesting day. Dude, there's some headlines. I'm sure you've covered it, but the Google DeepMind dude left. Dennis?
Yeah.
It makes sense why Google's getting hit. Let me share my screen right here as well. So we got a lot of earning guys to go through. Seda, obviously having a great day, 2750. That's up 13%. That's been a fun mover today. But Googs did not expect the head of AI. This guy's been their most public PR person to leave, which is a bit weird. So I'm sure there'll be stuff to analyze when it comes to that. Outside of that, I feel like a lot of price action has been consolidating today. Micron kind of been stuck within 20 bucks. Nvidia, Tanner, you got to be happy about seeing 220. It's been a while
Yep.
to get there. Yeah, he didn't leave Google, but he left his position as the head of DeepMind, or the chief AI guy. So I think that's why the market reacted to it. If he left the company itself, I think the market would be a bit more upset. But it is weird, right? Because this is the guy that talks about, staying up till 4 a.m. coding, thinking about AI stuff, and now he's moving into a more managerial role, which I think the market's questioning if Google's already behind Anthropic and Claude when it comes to agentic experiences in the enterprise. Then what's going on right there? Nebius down 1%. Iran down about 4%. I think a lot of the semis consolidating today is pretty normal, especially because they've had a massive run over the past couple of days. Same thing with the software names. The earnings that we have today after the bell, guys, it is going to be absolute chaos. Sandisk is the one that we're going to be listening to. And I think that's going to be the one that's going to be the most important, because we obviously need to know what's going on in the memory sector. Western Digital is also today. That's important. Seagate crushed it. So I have no expectation for it. And SK Hynix and Samsung crushed it last week. So I have no expectation for Sandisk to be bad. But nonetheless, those are going to be important. Then you have Applovin, software stock, Melly, International, Duolingo. This one's actually had a really good run over the past couple weeks. Figma, I think it's going to be interesting. DoorDash, Axon, Elf, a lot of consumer different brands, IO and Q, Quantum. So I just think we need a solid day of continued earnings beats. I don't know which one of these names outperform. I'll do a poll in my chat. But yeah, Tanner, I know you know Micron really well. Do you know a lot of the internal dynamics around Sandisk, and do you have any kind of big expectations for it?
No, I mean, I assume that there's going to be a big boom. As much as we've seen a big boom in DRAM, we're likely to see the same thing happen in NAND. I did want to bring up, I just saw this story pop up a few seconds ago. Trump administration plans to impose tariffs of 15% on polysilicon derivatives.
Whatever polysilicon? What the hell is a polysilicon?
Polysilicon derivatives.
Does anyone know what that means? I have no idea what that means.
They're the essential inputs for solar panels and semiconductors. So sorry, I thought that meant like polysilicon and its derivatives. I was like, anyway. But yeah, so they're saying polysilicon and the like for solar panels and semiconductors. China controls over 80% of the global production capacity, prompting U.S. efforts to reduce supply chain dependence via Section 232 investigation.
Is that actually helping T1 Energy? T1, wow, straight moon, 470 to 550. I actually heard of this headline yesterday. It came out, I didn't know it was tariff oriented, but it was Trump definitely trying to incentivize more of this stuff in the United States. Okay. Decent for, is Enphase up at all? Enphase, no, that one's still down 6%. All right, so some of your solar names still getting hit right there, which is interesting if T1 Energy is getting the bid. Meta basically flat on the day. SpaceX, ugly day, down 12%. Palantir down about 3% after a 30% day overall yesterday. Put in the chat if you have a Sandisk position or a sizable memory derivative, because obviously I think the entire memory trade will be impacted from Sandisk. In terms of these sleepers, Duolingo, Figma, Elf, are there any that are catching your attention, Tanner? Because
yeah,
I don't know. I think there's a couple that could really make a big move today.
Yeah, I think Figma could make a very big move. Their earnings over the last couple of quarters have been nothing but exceptional. However, people keep questioning some of the partnerships around Anthropic and these sort of things. I think that they could really come out with a big surprise. Also, I think another sleeper pick that people are not really paying attention to is Dave and Mercado Libre. Dave has been such a winner. They have posted unbelievable earnings for probably the past 8 or so quarters, and yet it's still a very small cap name, or mid cap name that retail is not really paying attention to.
I think that's fair. Dave has outperformed every fintech the past 5 years, I believe.
We've got a lot of names in this list that are either in my portfolio or in the stock draft. We've got Mercado Libre, Chime, but in terms of the stock draft, we also have Fluence that I think Chris has, and there's one more. Fastly is tonight, Sunrun, Abcelera, Zillow.
Soundhound. I know people have liked this one. Oh, Zillow's tonight. Okay, so there's gonna be is Sandisk at 4:30 or 5?
4:30.
Okay, so we will have 30 minutes, folks, to really get through all the earnings. By the way, Burry just sold DraftKings and Flutter. So he's out.
Wow.
I don't understand why he bought them in the first place. But okay, so there are gonna be a lot of earnings that we have to look through as we get into it. Zillow, SoundHound, Fluence, Chime Fast. So I think everyone is gonna have a different kind of take on all these different positions that are out there. Applovin was actually green on the day, now going red. But Sandisk, this is the main one. Like if this thing tanks 10%, or it's all priced in or something, like that's not going to be fun. And I think that's kind of why Micron's been range bound today.
Do you, I mean, we can pull this in terms of it being a pump or dump, but I don't suspect that they're going to do anything other than beat earnings by large double-digit rates.
Yeah, I think they're going to crush, but like Micron crushed and then fell 40%. So was that bad macro, or was that the market saying, you crushed so well that we think you're not going to be able to crush further than this in the future because of the cyclical, which if it slows down, but it's still really good earnings, then who cares, right? So
yeah, but you know what? Sandisk last quarter fell on its earnings initially. And I remember that because it fell below $1,000. It went to like 999 at one point. But that was 3 months ago, and now we're 36% higher. You know, so will it matter if over the long term, you know, people start to turn and look at this as being undervalued versus how much earnings they're actually putting up? I don't know.
By the way, on my side, guys, let me know if the audio is way better from the morning, because if all I had to do was put in AirPods to fix it, then you guys will see me with AirPods on for the foreseeable future. If that's all it took, then that's amazing. That's amazing. Yeah, I agree. I put the poll in the chat. 63% of people say Sandisk is the one that is going to outperform. Then you got Figma, Applovin, Duolingo. It's all good. It's all good. All right. AirPods, baby. Shout out to Apple. That will be part of the attire every day. Duolingo is still down 23% this year, even though it's up from 90 in the April lows.
Yeah. Duolingo is also in the draft. Matt picked that.
Matt did pick that as well. Elf, I know a lot of people like that one. This has made like a 40% move, or I think, no, it's made like an 80% move in the past month. So again, same thing like AMD. Maybe it just ran up too much into the print, but will give us an expectation of what's going on with the consumer. What did people do today? Any moves in the chat? Bought, sold? Tanner, did you buy, sell anything?
I have not purchased anything today. I'm almost near like all-time highs. Obviously, I need Nvidia going to 240 was whenever my portfolio topped out. It's by far my biggest position, but Shopify right now, it's a green day for me. Nvidia up 4%, Shopify nearly up 17+%. Those are my two biggest names in my portfolio.
Yeah, I've never experienced a Shopify green day until today. So this was fun.
I'm happy you're in it with me, man. This is it was a great earnings call too. I don't know if you listened or not.
I've not listened to the earnings, but the growth was phenomenal. And I think that's, you know, you buy companies where the growth is amazing and it's reaccelerating and they disprove the narrative. I think Shopify and Zeta in particular proved today that when the noise is the loudest and people are talking and chirping, if you just know what you're buying and you're buying at the time when everyone hates it, that is where you make money. Like Shopify was under 100 for like a month. Zeta was under 20 for like a year. Like, yeah, it was at 21 last night. Like, so there's opportunities to just buy if you believe in something. And the market eventually catches up, right? Sometimes it takes a long time, but eventually the market needs to allocate capital to growth. So I see a bunch of people in the chat here took some profits throughout the day. A bunch of people sold some Zetas, sold some AMDs today. Obviously that one, we covered it yesterday. Great earnings, but just got ahead of itself in terms of the actual valuation, down 6%. SpaceX actually had a big bump in the morning, and now it's right back down to the lows of the day at 14%. So I don't know.
Are you getting this name at all?
SpaceX?
Yeah.
No.
Like if this gets down to 90, are you interested?
Nope. I know too many people that are going to be dumping their bags on me if I buy it. Like I just feel weird buying it. So I'm not interested right now. But look, now if it's 90 in a year and the company's grown so much, maybe it's more interesting. But I think there's other opportunities. Robinhood, again, a little bit of a dump into the close, 92.90, did hit 95 today. Enphase down 6. We got about a minute. All right, folks, here we go. Sandisk, it's a big one for memory. It will kind of determine the trajectory of some of these other memory stocks. Figma app, I think, could be really important for SaaS. Obviously, we got Duolingo. Overall, S&P did hit 776. We're closing red, as we probably should, because it has been a massive 2 days. It'd be kind of crazy if we were up another 0.5% or 1% today. So I think today's been good consolidation, and hopefully we just get some good earnings to keep this going.
I'm happy to be here joined with you, man. It's greatest time to be covering the stocks is during earnings.
It's fun. Thank you all for being here. We got a lot of earnings to get into. 4:30, we got Sandisk. It is now Wednesday, August 5th, 4 p.m. The stock market is closed. I can't hear it that well with the AirPods in, dude. It sounds
No mute, gang.
I know what you guys feel like now. All right, S&P closed below 770, 769.77. Basically flat on the day, although we did have some nice green momentum in the morning. Palantir down about 2.6%. You got Meta 588, Roblox down about 2% after being down 10% over the past couple of days on earnings. Zeta ends at 27.09, got up to 28.50, still 11% day. Highest price it's seen in the past 52 weeks, which is nice. Micron actually closed below 900, 893. Nvidia closed below 220, so everything got a nice little dump towards the end of the day. But again, this week has been relatively good for many of these names. Even Shopify got a red candle towards the end of the day, but up 17%. Gold was up today. Netflix was up a little bit today. Flutter was down 11% on earnings. Disney was up 3.6%. Your Figmas of the world were up 3.8%. Applovins, which got an upgrade this morning, that was down 0.5%. But this one, based on their growth, I mean, this thing was an $800 stock at one point, got into the S&P 500. So if they have a really good growth quarter, maybe that sentiment comes back. SpaceX down 12%. AMD down 7%. And then this is what we got for earnings. What'd you say?
Sandisk is moving.
Sandisk is moving. All right. So we got a lot of companies. Let's start with Sandisk. Hopefully we get those results very soon. Up 1% after hours, was down 5% during the day. So we need to get up at least 5% to break through the intraday action.
Mercado Libre up 2.7%. I don't have any of the numbers just yet.
Me either.
Axon is out. Double beat. Beat on EPS by 2%. Wall Street wanted $1.84. We got 188. Beat by 4 cents. Revenue, 876 million was the expectation. They did 904 million. Beat by 3%. 2 small beats. That's all the information I have just right now.
Axon, another SaaS company, also hardware play with body cameras.
Yeah.
Stock flat after hours, but you got a double beat. This thing was like at 300 at one point this year, so it obviously has made a pretty big move. Okay, Western Digital. This is also in the memory space today. Oh no, that's down 7. Sandisk is flat. I don't like that for Sandisk if Western Digital is down.
Duolingo's up 7.
I mean, dude,
trim Western Digital, buy Duolingo.
It fell 80% at some point. It had to make a move, right? There you go. That's up 7. Western down 4. Sandisk down 2. I don't like the sign of this. I don't have exposure to memory, but I do not want memory to tank. That really messes with high beta.
Western Digital double beat, but revenue beat by 1%. Revenue's up 44% year over year, but that is not the smashing beat that people wanted to see. EPS beat by 8%. Wall Street wanted $3.30. We did $3.56.
That's
Western
not enough.
Digital is down.
That's not enough. I mean, these are not the record-breaking beats that we had last year or even 90 days ago. That is not enough. I mean, it's good. Don't get me wrong. Yeah. But if the Sandisk has got to come with a big beat because the market's already interpreting that Sandisk is going to have the same as Western Digital. Duolingo up 8%. Don't have their numbers yet, but that's green. Mercado Libre.
I got the numbers.
Go ahead.
Mercado Libre beat on revenue by 4%. Wall Street wanted 9.7 billion. They did 10.2 billion. EPS, they wanted $9.11. They did $9.19, beat by 1%. So big beat on revenue, 4%, but almost met on EPS. But revenue year over year up 50%.
Goodness, dude.
They're growing faster than Western Digital.
That company just compounds. They just grow. We have Square, which is up 3. Adjusted operating income 875 versus 865. That's a beat by 10 million. This is the company that did 60% of layoffs last quarter. Stocks up 3 right there. Looking for revenue and EPS, but they beat on adjusted operating income. Don't have Chime yet. Don't have SoundHound. Trying to get Duolingo's numbers. I still don't see that yet, but it should be relatively good. Mercado Libre up 1. Axon up 3. Symbotic up 1. Epsilera don't have their numbers yet either.
Really big beat on Western Digital's Q1 guide. So for next quarter, they're expecting a big beat on adjusted EPS and revenue. That was higher than Wall Street expectations.
Why is it down
Management
9%?
Yeah, management said that they expect further margin expansion and strong free cash flow generation.
Dude, I feel like the market has priced all of that in and they're not happy enough with it. Either that's a gross overreaction or Seagate after hours is down 2. Micron after hours is down 3. SoundHound, they beat by 23% on EPS, -10 versus -13 expected. Revenue 61 versus 52. That's a beat by 18%. EPS is up 47% year over year. Revenue is up 45% year over year.
SoundHound kind of crushing it here.
They crushed it. Oh no! Oh no! Oh no!
Uh-oh.
Oh no, 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 no. No, no. Please no. That's
Chris's
a little
spreads are
messy.
doomed, bro.
Oh, dude, of course Chris buys memory today. Of course. This is Nebius. Okay, Sandisk down 10, Nebius down 1, AAOI down 2. See, this is the thing, bro. Sandisk is not just Sandisk. It's everything high beta and AI. It like you don't want this to crash. Why is it down 7? They beat by 14% on EPS, 39.25 versus 34. That's a $5 beat on EPS. That's not a small amount. Revenue 8.9 versus 8.39. That's a beat by 7%. Nothing that crazy, but still EPS is up 13,000% year over year. Revenue is up 372% year over year.
Applovin.
What just happened?
Applovin came in line on EPS, missed by 1% on revenue. Revenue still came in at 53% up year over year, and EPS was up 57% year over year, but there was no double beat. This is kind of in line on both.
No, but how is Applovin down 21%?
I think the whisper number must have been much higher.
But this is a very large company. They don't fall 20% on missing a small whisper. This is not Amazon. Like this, the street's that harsh on Applovin. That is unbelievable.
That's wild.
I mean, it's kind of believable, but it's still I mean, that's crazy, dude. That's crazy.
They were go deep in the numbers going into they're not a cheap company.
Yeah, but they're growing. Like Shopify's not cheap either, right? And they grew, right? Like that's interesting. Sandisk, fourth quarter revenue, Street wanted 8.4. They came in at 8.97, so they beat on the guide. Adjusted EPS, Street wanted $43. Sandisk said we're going to do 46. That's a beat on the guide. I don't see the red flag in Sandisk other than the Street is not that excited about the sexiest trade of 2026, which was memory. And
Figma, I knew it. They're doing such great things. Revenue beat by 5%, EPS beat by 100%. Street wanted 4 cents, they did 8 cents.
Yeah, Figma should be pumping. This is a no-brainer. I mean, this one, it's been dead for so long. So this is kind of reminds me of Zeta, like a SaaS company that can beat numbers and has been depressed. So yeah, Figma revenue up 50% year over year, beat by 100%. Stock-based comp is still a concern, but Anthropic killing them is hopefully not anymore. $29. Applovin, I cannot believe this, dude.
Yeah, that's 21% wild.
Down.
Someone in the chat said TTD V2. Like, is this the next trade desk?
Well, Trade Desk's growth is abysmal. Applovin's like at what, 80%? They came in? That's their top line? 70%?
No, Applovin I think was 48%. Okay, 53%. 53.
Last quarter was like 60. So I don't know if that's horrible. Yes, Figma revenue was up 50% year over year. Fastly, that stock is up 11. Thank you. We don't have the numbers yet on this, but that is green. We got DoorDash in a second. Figma now up 6%. Sandisk down 4. It was down 10. Trying to recover Applovin. There is no recovery in sight. Elf, I don't have the numbers yet. I do have Dutch Bros. Dutch Bros beat by 10% on EPS. 33 cents versus 30 cents expected. Revenue 550 versus 525.
Applovin's down 28%.
Yeah, I don't get it. Dutch Bros up 4% after hours. EPS up 27% year over year. Revenues up 32%. Dutch Bros growing more than tech companies. Some of these tech companies, they've continued to increase the brand. Duolingo just lost it. 150 back to 134. They beat by 8% on EPS, beat by 1% on revenue. EPS is down 30% year over year. Revenues up 18%. Some funky stuff going on after hours, dude.
Chime is another one. I don't have their numbers just yet. This one I actually have in my own portfolio. That's up 6.5% in the after hours. This company has actually had like a quiet little reversal, or not reversal. I mean, like it's gone up a little bit over the last month. I didn't even realize.
Chime up about 5% after hours. IONQ missed EPS by 747%. Street wanted negative 60 cents. They came in at negative $5. They do 80 million in revenue versus 66. So they beat expectations by 21%. Revenue's up 287% year over year. EPS is down 626%. This is a $14.9 billion company doing about $300 million of revenue a year. The CEO did say NVIDIA GPUs would be cooked by 2027 and replaced with quantum computers. I don't know if that's happening. Did Figma reverse? Oh my goodness, Figma. What is going on after hours, bro?
Can you imagine Elon Musk comes out on the SpaceX call and says we're exclusive to IonQ?
Yeah, that would be funny. That would be.
Wow. Did you read Elf's numbers? These are unbelievable.
I have not. Go ahead. Go for it.
They beat on revenue by 11%, and they beat on EPS by 143%.
Is Elf up?
Barely.
We get Elf up. Elf is down 3. Okay, so Elf has a massive beat on EPS, 140%, beat on revenue by 11%. That stock's down 4. Duolingo was up 10, now it's down 4. Figma was up 7, now it's down 11. Sandisk is hopefully trying to break even right here, but it was down 10, now it's only down 1. Soundhound is the only one holding on to some of these games. DoorDash is down 2. They beat EBITDA 914 versus 843. Marketplace 33 billion versus 34 versus 33.4. It looks like they beat on the top and the bottom. That stock basically flat.
If you went on the earnings predictions on Call Sheet and just put $10 on Soundhound would be the biggest winner today, you just won $4.3 billion. Like, no one had this in their prediction. This is unreal.
I mean, this is the stock market. Greatest show on earth. Here's some more coverage on Sandisk. This is really important to figure out what the street is so upset about here.
The non-GAAP gross margins for the quarter were stronger at almost 85%. The street was anticipating 80%. A reminder, Sandisk was spun off from Western Digital just in 2025. They make NAND, so that's a memory that is stored on an actual device, disk drive, USB, etc. And so their guidance was a mixed bag, what we also saw with Western Digital. So the guidance EPS at $45 midpoint, a little bit higher than the street, and it was the Q1 revenue guide that was just a touch higher than what the street anticipated. So perhaps that is the reason why shares did initially drop, coming back a little bit, and then the non-GAAP gross margin guide is higher, about at least 5% higher than what the street anticipated. So that's strong there. No major quotes or anything in the release either, but you can really see the discrepancy between Western Digital and Sandisk. These are names that have soared, to your point, year to date, Melissa. This one was up over 460% into the print. So perhaps just profit taking right now.
Yeah, although
I know it's an excuse no one wants to hear, that it's profit taking, but honestly, some of these names, that might be the excuse.
Yeah. By the way, the Call Sheet thing was a joke. Your audience takes me way too seriously.
Oh, I took you seriously, dude. I thought you looked at the numbers.
$10 is making $4.3 billion.
I was a little confused, but I was trying to pull up the numbers, so I didn't really factor it in. But I was like, oh yeah, that's kind of crazy. But Fastly's holding on to some of its love right here. Fastly's up 7. They beat EPS by 114%. They beat revenue by 5%. EPS is up 600% year over year. Revenue's up 23% year over year. DoorDash, they missed EPS by 2 cents. 46 cents versus 47, missed by 2%. Revenue, they beat by 3%. EPS is down 29% year over year. Revenue's up 36% year over year. Elf, I don't know why this is falling off a cliff after beating earnings by 170%. Same thing with Figma. Zillow beat by 16% on EPS, beat by 2% on revenue. EPS up 30 year over year. Revenue's up 18. Zillow's also down 2% after hours. The only thing holding any level of gains is Chime, Fastly, Soundhound, Axon, which is barely anything. Everything else. Dave is down 18, Tanner.
Hey, I didn't say I hold it. I just said this is a company that's gone from 5 to 500. Okay, in the last 30 months or something. It was one to follow.
But like, were the earnings that bad? Like
I don't know. I haven't got the numbers.
Elf down 8, Sandisk still down 2, Figma down 14 now. Dutch Bros was up 7, now it's down 1. This is a weird Wednesday.
Dude, Micron's up 1% in the after hours. Micron's up.
I hope that's a good sign for Sandisk coming back. This is oh, what about Fluence? Didn't they have earnings? Fluence?
Yeah.
Oh my goodness.
Chris is
Just numbers on a screen, guys. That's all it is. It's just numbers on a screen. They go down, you don't look at it. They go up, you pay back attention. Why is this down 18? Every AI play outside of Fastly and Soundtown, which are, you know, derivative AI plays, getting demolished here.
Western
After
Digital down 9, Duolingo down 7.
eBay beat by 6% on EPS 160 versus 151. They beat by 4% on revenue. eBay's revenue up 15%, EPS up 18%. eBay is flat. Where is Accelera? That's the biotech that's down 5. I don't have their numbers yet, but that one's also getting hit. HubSpot, they beat by 8% on EPS, beat by 1% on revenue. This stock is down 9. Now, HubSpot, I don't know how much of a moat these guys have in SaaS, but I mean, EPS up 49% year over year, revenue's up 20. Street takes it down 9%.
Yeah.
Fluence missed EPS by a lot. I don't have those numbers. Let me see if I can get it. Fluence is also one of those X names that people are very excited about. Okay, revenue. Wow. Street wanted 848 million. They came in at 649. That's a miss. EPS, the Street wanted them to give you 2 cents of profitability. They came down to negative 24 cents. Yeah, these are not good numbers across the board. I mean, not necessarily across the board, but on many of these names, the numbers just aren't good enough.
Applovin is going to be an interesting one to follow while they have their call. Adam's definitely been one to share some new guidance numbers and things that maybe analysts weren't thinking about previously. So this one has come back in previous quarters in the after hours. It already has. We dropped below $300. Now we're sitting at $335. So I don't think that this is the price that we're going to open up tomorrow. Let's just say that.
For Applovin?
Applovin, yes. Adam, the CEO, could say a lot on the call.
Applovin down 20. Tanner, you can share my screen. Honest, I don't have those numbers. I should be seeing it soon. Is Honest down? Honest is up 4. Now, Honest is a small company, 400 million. But that's up. Fluence, again, we talked about that. I don't see the earnings for Honest yet, but that's up. Joby, I do have their numbers. Joby is beating revenue by 27%, missing EPS by 9%. EPS is up 40% year over year. Revenue is up 25% year over year. Joby's flat.
But what is their like? What's the base on that?
They 30 million.
Okay.
So it's not. It's not a lot, but Sandisk, can we get green? Dude, Sandisk is a little scary, bro, because this was not like a type of. I mean, Western Digital, you could say those numbers weren't as good of a beat as they needed. Sandisk put up some big boy numbers. Sandisk put up some big boy numbers. Oil after hours is at 74.90. It's actually the lowest of the day, so you can't even blame the macro here. IONQ missed horribly on EPS. Stocks up 2% after hours, but yeah, they missed by like 700%.
Is everything honestly like, were earnings that bad? I felt like 80% of the numbers that we covered, if not more, were green.
Yes, but some of them weren't as green as they needed to be. Having said that, they were not bad enough to be down 10 to 20%. The initial moves is what's confusing me. Like, why did Duolingo and Figma pump? And then 5 minutes later, like, did another number leak? Did the market switch their attitude? Is this more algo macro driven?
I don't think I've ever seen this in my life. SMR expected revenue was 11.9 million. This must be incorrect. They did $75,000. They missed revenue by 99%.
Dude, I think you and I are doing more revenue than
like AK Media did more than 75K this
Can I go public, bro? Can I go public if all it takes is 75? I will have the best earnings calls. Yeah. You guys will get the best quarterly updates. The best ones. I mean, it will be a party if I can be a public CEO. Redwire, I don't have those numbers yet. But this one got chopped in half ever since the SpaceX IPO, unfortunately. You can't go public with them, Mike. You know, this mic is probably better than a lot of the mics we've heard on these freaking
Dude. Occidental Petroleum. I don't know why
Occidental. It's what? It's Occidental.
This is a big name. Revenue beat by 15%. Wall Street expected 7.25 billion. They did 8.3 billion. And then on EPS, they wanted $1.85. They did $2.40, beat by 30%. Huge double-digit beats there. Revenue's up 29% year over year. EPS 515% up year over year on Occidental Petroleum.
It's Occidental. Why do you keep saying that?
Oh,
why are you saying it the wrong way?
My bad.
This is like one of the biggest Buffett stocks ever. How do you?
It is a big Buffett stock, and I'm pronouncing it wrong.
Anyway, those numbers are great. 1 point. I mean, we need a lot of energy. So it makes sense. And rising energy prices have helped. I mean, Berkshire basically owns like more than 51% of this company. So there may be a world when this one goes private soon as well. Oh wow, really pumping.
Yeah, starting to go now.
Up 3. Sandisk still down 5. IONQ down 3. SMR down 2. Tanner, thank you for letting me call out a mispronunciation for once.
I know.
Be on the other side of it. Applovin, I still don't get why it's down 20. Does anyone heavy in Applovin that has anything to say? Like, why is Trump live right now? Like, we don't need more volatility.
That's true too, right? While you're trying to do earnings, you have Trump potentially placing new tariffs in the market. It's not really a great macro to be producing misses.
This is why every time I think of buying, levered strategies before earnings, you get a day like this and you just remember that some days it'll be good. Figma was good for 5 minutes.
Mm-hmm.
Your calls are going to open up 4x in the morning, and then it's just not good. And it's like, you just never want to take that gamble with an expiration date. Fluent's down 17.
Do you have Fastly there?
Fastly is, we looked at their results. They're up.
Yeah, 5%. Triple beat raised guidance by a lot. Estimate was 33 cents for the full year of 2026. They're now saying 52 cents.
Wow. That means they're going to get a deal like Akamai did with Anthropic. That's a big boy raise. I mean, if everything was up after hours, the stock would probably, Fastly fell like 30% last. This is a big mover on earnings. That could be up big tomorrow if the street likes it. Viavi data center play. This one is up 4. Revenue's up 50% year over year. EPS 13 cents versus 4 cents. That's a beat. Guidance looks like it's a beat. Data center business, network and services business is growing very well. Operating margins 24% versus 14. That's a beat. I mean, you have some decent numbers right here, but the big ones, like Symbotic, which is not a big company, but still 30 billion is not small, down 6%. I mean, there's like 3 companies that have held their momentum today. Elf, is that one still down? Elf has recovered. It was down 15. Now it's down 2.
Someone in your chat said that Occidental sold a fraction of their business to Buffett, so maybe that is juicing their numbers a bit.
I think the chemical part of the business.
Yeah, OxyChem.
Yeah. Okay, so that's fair. Melly's now 5. This is one of the weirder earnings I think we've ever. I mean, this is. And I'm not optimistic going into the Sandisk call now. And I hope they say something that changes the momentum. Is Centrus Energy today? Is it LEU? That stock is flat. I'll see if I get their numbers, but I don't see them or Redwire yet.
HubSpot reported as well. They're down 11.7%. Or let me actually check. That was a little while ago.
Okay, June. I don't see Centrus's numbers. App down 23. Solaris Energy, that stock is up 6. I don't see their numbers either, but that one getting some love. $5 billion company, small one. IONQ down 4.
HubSpot did a double beat and then missed on guidance. They're down 14% right now. Hubs is the ticker. I don't know if you have it.
Yeah. Some more color on Sandisk. So the guide for Q1 was a little light. Street wanted, I think Tanner mentioned that, 11.1. They came in at 10.8. EPS guide was a beat, but only by 50 cents. Data centers up 130% Q over Q. Edge is up 392% year over year. Consumers down 5% year over year, but consumer is not that relevant. Qualcomm had the same issue with phones, right? Like really, it's the data center business that matters. They just authorized 14 billion of buybacks, so they have 15.5 billion remaining. We closed 2026 with a leading technology portfolio, established data center as a key growth pillar, and deepened our commercial customer partnerships. You know, the issue here, once again, is when you look at their stock, like over the past, not even 3 years, but past year, it gets kind of stupid, right? I mean, this is the stock. $27 to $2,300, now to $1,290. Like one could say the alpha has been achieved. And now the question is, should it trade at a multiple that it deserves, that a tech company should get? Or is so much of the alpha baked in and there's so much fear around DRAM and NAND prices, HBM, that the street says we don't want to take the risk right now?
Chris's fluence in his stock draft is now down 21% in the after hours. Mind you, this is his most read name in his portfolio already.
Yeah, I think that there was some hype on this on X as well as an energy play. I mean, look, these names can rebound 20% the next day.
Yeah.
So the move is the move, but it's also just like, why? Like you know, are the results that bad? Because, you know, these are smaller plays to the whole picks and shovels bottleneck trade. So if that trade is dying out, there's a lot of people that are just tourists for that trade. They don't actually want to hold these names for a long time, which means they're going to be out. They're going to sell. Bitcoin, why is BT? Wow, to make tonight even weirder, Bitcoin goes up while everything gets hit.
It's not going to matter in 10 years, right? Money's not going to be here. Enjoy it, ladies and gentlemen.
Dude, Figma's down 16. I don't have a position, but I've been looking at Figma for a while. I wouldn't mind if this thing gets back into the very low 20s, because 50% growth, like in Anthropic, I don't think is going to kill their business. I have to do more work on it, but if the street's going to send it down for that, maybe there's a stock-based comp issue the street's upset about.
So what's the fair value price on Figma? I mean, I think Adobe tried to acquire them at 20 billion market cap years ago.
Yeah, right now market cap's 14 billion. I don't know. I'm doing a lot more. I'm trying to understand Dylan Fields as a CEO. I'm trying to think, like, is he the guy that you could count on for the next 10 years? I think he is, but I don't know. And like, it really comes down to that a lot with everything. But the Anthropic thing was why that stock was at 16. You know, people look at them from 150 to 30. I think that's unfair. Like, it pumped to 150 just because of the market being stupid. But more accurately, 16 to 30 has been the range it's been swinging behind, and move back to 20 would be a bit more interesting. Salesforce is down after hours, is it? Oh my! That doesn't happen randomly. 4% on Salesforce. What do they say? Salesforce, there's got to be something. Mark Benioff gets a new operating chief. Miguel Milano is the new operating chief. Wait. No, not CEO. COO. They have a new COO. ServiceNow is down 2% as well. Okay, maybe these names are just falling because SaaS is falling.
Yeah.
But Salesforce 4% is a bit bigger than expected. Wait, where's Palantir then after hours? Palantir down 0.5%. Weird Wednesday. It is August. August is August.
I'm just going through a little bit of Mercado Libre right now. This is an unbelievable business.
Go ahead.
I mean, they're just killing it across the board. They're growing in every geography. You know, they did like $10 billion in revenue, up 50%. This is, for people that don't know this name, they're like the Latin American Amazon, but they also have a fintech side of the business. They're killing it on both sides. Customers are spending more with them. They have like AUM, assets under management, for Mercado Libre went up 68% year over year. Like, they're just killing it in fintech. They're killing it in the package delivery. I love this business. Oh, call starts in a minute.
Okay, so we all want to listen to Sandisk, right? Yes, I think we kind of have to.
I think so.
we'll put updates in the chat for everything else, but we went through as many earnings as we could. I think Sandisk kind of determines what happens with a lot of this high beta stuff. I'll pull it up as soon as it starts, Tanner.
Yeah.
And then we'll take a look at it.
You got the chart one?
Yeah, we got everything.
Okay.
Applovin still down 22. Again, we'll be in the chat and put some updates if we get some answers for why Duolingo's 11 and Appcelera, I still don't have that yet. That's down 7. Redwire is now up 4. I still don't have their numbers, but that was down. Now it's up. Yeah.
Did you talk about the Appcelera double miss?
I did not. Yeah, you can say those numbers.
I don't have the exact percentages here, but yeah, it was a double miss. Expectations for revenue was, or sorry, no, I only have EPS. EPS was supposed to be negative 14 cents. They did negative 18 cents. Revenue fell 76%.
Oh my, year over year?
Yeah, year over year.
Okay, that's a bit aggressive. Redwire lost 22 million versus 29.5 million. So that's why that stock is up. The call is still not live yet, guys. As soon as the call is live, we'll play it. It is not live yet. Fastly is reversing. Centrus Energy 176 versus 149. That's a beat. This is a nuclear play. LEU's up 4. Okay, market's at least liking that. And then Redwire, you have a double beat.
Okay. Pray for my Micron position during the Sandisk call. Soundhound, man, they really, really beat. I wonder if that's worth looking into or if that's still kind of a little bit of a meme stock.
Okay, I got the Sandisk call. Let's pull it up.
Our annual report on Form 10-K and our other filings with the SEC for more information on the risks and uncertainties that could cause actual results to differ materially from expectations. We will also make references to non-GAAP financial measures today. Reconciliations between the non-GAAP and comparable GAAP financial measures are included in the written materials posted in the investor relations section of our website. With that, I'll turn the call over to David.
Thanks, Ivan. Good afternoon, and thank you for joining Sandisk's fiscal fourth quarter earnings call. As we close fiscal year 26, we believe Sandisk is in a strong strategic position to deliver for our shareholders and customers. The strategic actions we have taken over the past year have established a stronger foundation through technology leadership, longer-term customer partnerships, financial flexibility, and operational capabilities, which collectively position us well for the next stage of execution, growth, and shareholder returns. Over the past year, we strengthened our portfolio with BIC's leadership across both TLC and QLC and the continued advancement of high bandwidth flash. Established data center as a major pillar of growth, deepened customer relationships through multi-year shareholder returns. Over the past year, we strengthened our portfolio with BIC's leadership across both TLC and QLC and the continued advancement of high bandwidth flash. Established data center as a major pillar of growth, deepened customer relationships through multi-year partnerships enabled by our new business models, our NBMs, with momentum continuing to build during the quarter. We reinforced our supply chain and transformed our business model with a net cash balance sheet and a capital allocation framework designed to generate growing and durable free cash flow to reinvest in the business and return excess capital to shareholders. The fiscal fourth quarter provided our clearest proof point yet. We delivered record revenue, gross margin, and earnings per share, each above the high end of our guidance, and repurchased $4.5 billion of company stock. We are encouraged by this progress and believe the long-term earnings power, cash generation, and resilience of this business will become increasingly evident as we execute against this new foundation. Underlying our performance is the most important force in our market, the era of inference. AI is fundamentally a memory-centric, storage-intensive problem, and it is reshaping the demand equation for NAND. The shift to inference in agentic AI is generating data at a scale that is redefining storage requirements. Every AI interaction creates content that must be stored, retrieved, and served at low latency. And each of these steps relies on data storage products, including our high-capacity enterprise SSDs. NAND is the most scalable semiconductor technology in the world, and it has become a critical component of the AI architecture. This demand is anchored in strategic, long-term infrastructure investments by the world's largest technology companies, which are increasingly working with suppliers who can scale, partner with them, and secure supply that ensures performance and reliability years in advance. These enduring and mutually beneficial partnerships give customers greater confidence in long-term supply, while giving Sandisk clearer visibility into demand and a stronger foundation for planning, investment, and more durable cash flow generation. Our technology leadership is how we are capturing this opportunity. BiCS has become recognized as an industry gold standard for NAND, and this year we ramped BiCS 8 to the majority of our bit production, delivering industry-leading performance, density, and power efficiency across both TLC and QLC. BiCS 8 was enabled by innovations like CBA, hybrid wafer bonding, and our roadmap builds on that same fundamental approach, with future generations extending performance and cost leadership through continued innovation across multiple dimensions of scaling. Our leadership is translating directly into customer adoption across our various end markets. We scaled our compute-focused TLC enterprise SSDs across a broad set of hyperscale and AI infrastructure customers. And this quarter, we began shipping our QLC Stargate platform for revenue, giving us a complete complementary portfolio spanning performance-intensive compute workloads and high-capacity AI data lakes. A year ago, data center represented roughly 12% of our bits. Exiting fiscal year 26, it represents 38% of our portfolio and is our fastest growing end market. Our technology leadership also extends well beyond data center. Edge remains a large and strategically important end market for Sandisk, spanning smartphones, PCs, tablets, and an expanding set of emerging use cases in the realm of physical AI, including automotive, robotics, and on-device agentic AI. Near term, both PCs and smartphones are working through a period of adjustment as demand is shifting towards AI-enabled devices and premium configurations, driving higher storage content, particularly in smartphones. In the PC market, OEMs are growing revenue and expanding margin on a more profitable mix, reflecting demand for higher-end devices. We expect these markets to return to growth in calendar year 27, and over the longer term, on-device AI, richer content, and entirely new form factors will continue to expand the role of high-performance flash at the edge. Our ability to deliver high performance, density, and power efficiency positions us well as these platforms evolve, and we expect increases in content per device through future refresh cycles. Sandisk's global consumer presence remains a meaningful differentiator within the industry, giving us a unique connection with end users and channel partners. We continue to invest behind the brand, sharpen our go-to-market capabilities, and innovate around the products, capabilities, and experiences that consumers value. Our ability to innovate at this level is enabled by our operational excellence. Sandisk manages the entire value chain, from the design of the NAND die through front-end wafer manufacturing at some of the largest fab complexes in the world with our JV partner, to system-level design, including our world-class controllers, and final back-end assembly and test, all the way to the hands of our customers. This end-to-end integration, combined with our R&D depth, proprietary BiCS systems expertise, and the market diversity that gives us the optionality to direct our technology where it delivers the most value is what enables us to serve customers at attractive returns. Just as important, we grow supply primarily through nodal transitions rather than wafer additions, delivering mid to high teens bit growth from the productivity of our technology roadmap, with capital intensity that continues to decline as a percentage of revenue. This is a structural advantage and what makes this franchise such a powerful cash generator. With that, I'll turn the call over to Luis for an update on our new business models and a deeper dive into our financial performance and guidance.
Thank you, David. Fiscal year 2026 was a transformational year for Sandisk. We exited the year significantly stronger than when we entered it. We believe that we're well positioned to create sustainable value for customers and shareholders. Our new business models, or NBMs, reflect the stronger and longer-term partnerships that we're building with our most strategic customers, the value they place on our technology and products, and the confidence that they have in their demand. Our revenue growth, margin expansion, and asset efficiency enables us to deliver leading free cash flow per share and therefore generate an attractive return to shareholders. Since announcing 5 NBMs during our April earnings call, we have signed 5 additional agreements, 3 NBMs with new customers, and 2 deals expanding on previously signed NBMs. These extensions reflect our customers' strengthening demand exceeding their prior estimates. One of the 5 signed deals, 3 closed before the end of the fourth quarter and 2 closed after quarter end. In total, we now have NBMs with 8 diverse data center and edge customers and reflect the conviction our customers have in their long-term demand and the value they place on Sandisk. The length of our NBMs varies, extending up to 5 years with a weighted average duration of over 4 years. We expect our NBMs to represent more than 50% of our bids in fiscal year 2027 and approximately 2/3 of our bids in fiscal year 2028. NBMs are quickly becoming our predominant way of doing business. We will continue supporting our non-NBM business with uncommitted supply. Pricing for our NBMs include both fixed and variable elements, with a variable portion subject to floors and ceilings. We expect attractive margins even at floor pricing. Pricing of our non-NBM business will fluctuate with the market. The total expected revenue from all our NBMs we have signed is a minimum of $93.9 billion, assuming floor pricing. We believe actual revenue will be above that minimum. The remaining performance obligation, or RPO, at the end of the quarter was $59.8 billion and would be $91.1 billion, including the 2 NBMs signed after the quarter closed. The difference between the total NBM revenue and the RPO is the revenue that has already been recognized. Each one of our NBMs includes financial guarantees through a combination of cash deposits and financial instruments totaling $16.5 billion, which are intended to protect Sandisk if a customer fails to satisfy its purchase obligations under these agreements. These funds and financial instruments are mostly held by or provided through third-party financial institutions, with the remaining in our cash balance. For each of the existing deals, the financial guarantees are released towards the end of the agreement, so the ratio between the financial guarantees and the remaining performance obligation increases over time. Our NBMs are built on clear and detailed supply and demand agreements, defined by year and by quarter. These features provide clear visibility for our operations and additional financial protection. Overall, we're pleased with the 8 customers we have signed, as they strengthen our strategic partnerships. We expect these relationships to last for many years and to enable our customers to continue building exceptional products for their end customers. Going forward, we will remain highly selective in evaluating additional NBMs. The key characteristics we look for are strategic customers that value our products, duration of around 5 years, growing volume requirements, and attractive financials that enable us to invest in the business while generating a sustainable return to our shareholders. We will be patient in these evaluations. With that update, I will turn to the results for the quarter. Revenue for the fourth quarter was $8,965 million, up 51% sequentially and 372% year over year. Revenue came in above the guidance range of $7,750 to $8,250 million that we provided on our prior earnings call. Sequential revenue growth came approximately 1/3 from higher volumes and 2/3 from higher pricing. Turning to our own markets, during the quarter, data center revenue reached $2,977 million, up 103% sequentially. Edge revenue reached $5,432 million, up 48% sequentially. Consumer revenue was $556 million, down 32% quarter over quarter. We're pleased with this evolution of our portfolio and remain committed to serving all three end markets to maximize long-term value creation. For the full fiscal year 2026, revenue reached $20,248 million, up 175% year over year, with bids growth in the mid-teens in line with our plan. By end market, for the full year, data center revenue reached $5,153 million, up 437% year over year. Edge revenue reached $12,160 million, up 195% year over year, and consumer revenue was $2,935 million, up 29% year over year. Non-GAAP gross margin for the fourth quarter was 84.6%, up from 78.4% in the prior quarter and 26.4% in the prior year. This compares favorably to our guidance of 79 to 81%. Non-GAAP operating expenses for the fourth quarter were $484 million, representing 5.4% of revenue, down from 7.5% of revenue in the prior quarter as we generated additional operating leverage. This compares favorably to our guidance range of $480 to $500 million. R&D represents close to 65% of our operating expenses. Non-GAAP operating margin was 79.2%, up from 70.9% in the prior quarter. Non-GAAP EPS was $39.25, up from $23.41 in the prior quarter and 29 cents in the prior year. This compares favorably to our guidance range of $30 to $33. We closed the quarter with 157 million diluted shares outstanding. Key GAAP to non-GAAP reconciliation items include a gain of $807 million from our investment in Nanya and $67 million in stock-based compensation expense. We also recognized a tax benefit of $175 million from higher stock prices related to the vested employee equity, which was offset by $170 million of taxes recognized on the gain from Nanya. During the quarter, we repurchased 2,836,000 shares of our common stock for $4.5 billion. Moving on to free cash flow. During the quarter, cash flow from operations came in at $7,126 million, partially offset by $153 million from net cash capital spending. Gross capital expenditures totaled $562 million, representing 6.3% of revenue. We generated $5,035 million in adjusted free cash flow, which represents 56% margin. This excludes $1,938 million in NBM prepayments and deposits, which are included in cash flow from operations. We closed the quarter with $4,762 million in cash and cash equivalents on our balance sheet. With that, let's move on to guidance. We expect the NAND market to continue growing at an accelerated pace, supported by AI inference as a tailwind. We estimate the NAND market will exceed $300 billion in revenue in calendar year 2026, up 3x year over year. Looking further ahead, we estimate that the NAND market will approach $500 billion in revenue in calendar year 2027. Within this time frame, we expect data center share of total TAM to expand from approximately 30% in calendar year 2025 to approximately 50% in calendar year 2026, and to continue outpacing the market in 2027. Demand from our customers is growing faster than our supply. We therefore expect bits to remain on allocation beyond calendar year 2027. For the first quarter of fiscal year 2027, we expect revenue between $10.3 and $10.8 billion, with sequential growth driven by both bit growth and higher pricing. We expect non-GAAP gross margins between 83 and 85%. We expect non-GAAP operating expenses between $520 and $540 million as we continue to invest in innovation and R&D and have higher expenses related to taxes on employee stock compensation. We expect first quarter non-GAAP EPS between $44 and $46, assuming 155 million fully diluted shares. Here is some additional perspective for modeling purposes. Consistent with our long-term objective of growing supply mid to high teens, our capital spending will increase year over year, primarily as we ramp BiCS8 and BiCS10. Yet our investment relative to revenue will come down to approximately 6% for the full year. We plan to operate at higher inventory days, consistent with current levels, to support our NBMs and account for higher component costs. The higher inventory levels reduce sellable bits to mid-teens for the full year fiscal year 2027. Moving on to capital allocation. Our priority remains to invest in the business to support long-term growth and durability. We will continue returning cash to shareholders. Sandisk Board of Directors has authorized an additional $14 billion share repurchase program, bringing our total remaining authorization to $15.5 billion. We look forward to seeing many of you at our Investor Day in New York next week, where we plan to review the business in greater detail. We're encouraged by the progress made and remain committed to creating value for customers and shareholders. With that, let me turn the call back to David.
Thank you, Luis. In summary, fiscal year 2026 was the year Sandisk redefined what this franchise can be. We delivered record financial results, established data center as a major pillar of growth, secured our manufacturing and supply base through the next decade, and fundamentally restructured how we transact with our largest customers. The value of our technology, built on decades of R&D and tens of billions of dollars of cumulative investment, is increasingly being reflected in our financial results. As we enter fiscal year 2027, we do so with a balanced, well-structured portfolio spanning data center, edge, and consumer, one that has served customers across every part of the storage market for decades and gives us flexibility to move wherever demand grows next. We have industry-leading NAND technology across TLC and QLC, with a roadmap of continued innovation extending our leadership. And we are investing beyond traditional NAND in emerging technologies like high bandwidth flash that carry the potential to change the AI memory storage hierarchy entirely. Combined with our NBMs, a net cash balance sheet, and an active capital return program, the result is a durable growth model, a valuable franchise, and a business built to generate substantial increasing cash flow. We're proud of what the team accomplished this year and believe we are still in the early innings of this opportunity. With that, Ivan, let's open it up for questions.
All right, Q&A. Hopefully this changes sentiment here.
He said that the NAND market would expand to $300 billion in 2026 and $500 billion in 2027. Wild.
Yeah. Obviously a very large global TAM.
If at any time your question has been addressed and you would like to withdraw your question, please press star, then 2. At this time, we will pause momentarily to assemble our roster.
By the way, the head of product at X
The
just
first
stepped
question
down,
today
Nikita.
comes from Ben Reitz with Melius Research. Please go ahead.
Yeah, hey guys, how are you? Thanks for the question. I wanted to ask maybe two things. Last quarter you talked about the MBMs were being signed in this 80% margin range. I know there's a lot of puts and takes with regard to pricing. I was wondering if you can talk about whether it's in that ballpark or if it's kind of trending actually more towards the guidance for the next quarter. I would think it's more in the 80 ballpark. And then I have my follow-up is with regard to buybacks. If we just round up to 5 billion per quarter, I know the authorization isn't this big, but if you commit to buying 5 billion a quarter, that's, and you do that over the next 4 quarters, that's about 10% of your market cap. I mean, is that the kind of buyback magnitude we should be thinking of, or is it too early to kind of call the pace? Thanks.
Hey, let me take the second one, and then Luis can take the first one. So we plan to be, we're walking into the buyback program. We're our second authorization now. You saw we had a $6 billion authorization. We executed $4.5 billion in the first quarter of that. Now we've reauthorized another $14 billion. We expect to be very consistent in our execution of this program. We have a lot of confidence in the cash generation of the portfolio. Ben, to your first question, and Luis will talk about the margins, but we spent a lot of time over the last 2 or 3 quarters really working very, very deeply with our largest customers on committing demand. We have over 4 years of visibility now. So we feel very good about where the franchise is. And, I'll just speak personally as somebody that's been managing this franchise since March of 2020. I am thrilled to be at this point where we're recognizing the true value of this franchise and really ramping up the shareholder returns. But Luis can talk about the margin.
Yeah, Ben, we, not to pick a specific number, but we do expect to be around 80% for the new business models. As you know, there is some upside as prices continue to go up. We'll capture some of that upside as well. But we feel very good about the work we've done. We'll talk about about the MBMs, I'm sure, but you've seen there are not a lot. There are really meaningful deals that we did with 8 very strategic customers of ours. So we feel very good about that.
Thanks a lot, guys. Appreciate it.
Sure thing. Thanks, Ben.
The next question comes from Mark Newman with Bernstein. Please go ahead.
Hi, thanks for taking the question. For your Q4, I don't think you've given, obviously Q4 strong results. I don't think you've given the breakdown yet on the volume growth. You've given some numbers for the year, so we've got some pretty good estimate. But I wonder if you could give some clarity on what's in there for Q4 for volume, and also in the Q1 guide. Particularly for the Q1 guide, it seems a bit lighter compared to expectations. It's share price been down a bit last time I checked in the post-market. I just wondered if that is volume related or if that is because the locking in of pricing and so less price upside, or perhaps a bit of both, or is it a bit of conservatism? Really appreciate it. Thanks.
Yeah, so in Q4, Mark, what we mentioned is that about 1/3 of the growth came from incremental bits and 2/3 came from pricing. So you have that split there. And obviously, as you compare us versus others, there is a different timing on when price increases were taken. So you have to look at things over several quarters to really understand where we are, because as you know, we took significant pricing the prior quarter. If you look at Q1, we expect both the growth to come from both bits growth and modest price increases. So we expect both of them to be contributing to our revenue growth.
Okay, great. Thanks very much.
Sure, Mark.
The next question comes from David Gibson with MST. Please go ahead.
Thanks very much. Great quarter. Two questions. I'm just wondering if NVIDIA's context memory CMX standard and their plans for storage next are opportunities for you with products to come. And then the second, you announced the other day the global standard with SK Hynix for HBF. Just wondering how far out are we talking about for samples of such a product? Are we 1, 2, 3 years away? That's my question. Thank you.
So David, sure. So look, there's a ton of innovation going on right now in inference memory architectures, which we think is fantastic, very healthy. There's a lot of different ideas. We're gonna dive into this a little deeper next week at our Analyst Day, where we'll actually go into how we think about the problem and kind of how you dimensionalize it. But yes, all these are opportunities for us. We think, especially inference is a memory-bound problem. Storage is extraordinarily important to the equation. We showed some stuff in our FMS keynote just a couple of hours ago about how when you use HBF, how we simulate performance and maybe break through some bottlenecks. So we think there's an enormous amount of innovation happening. As we scale inference, we think it provides an enormous opportunity. The biggest, the way we're thinking about this is staying very close to our customers, because they're going to be the ones that define what the architecture is in the future. I mean, all of us as suppliers will provide a lot of good ideas to that. We'll work with them closely on, which ones are going to be the predominant ones for what they're optimizing for. And these are really where our NBMs, we think they're extremely important in that we have NBMs with, several of the largest hyperscalers in the world. They've given us forecasts years into the future that include, quarter by quarter, month by month mix. So we know very clearly what products they're going to deploy and the intensity that they're going to deploy them in. And it keeps us very close to the conversation as their deployment architecture changes. It lets us reflect that in our roadmap appropriately. So, there's a lot of good ideas out there, a lot of, flashing green light for innovation. We know we're a super innovative company, and we think that provides nothing but opportunity. Now, on your second question, HBF is something that, we announced almost a year and a half ago now. It was very much targeted at this whole idea that inference was going to require a different storage and memory architecture. We feel very good about where that product is at. We'll tell you a little more about, where we're at specifically next week, but we feel very good about deep conversations with customers. This week you saw additions to our advisory board. At FMS, you saw some very significant customers talking about the technology and how they could use it. So we'll have more to say as we progress with technology on actually shipping and release dates and all of that. But from where we were a year and a half ago, that this was an idea and a lot of research and some work that we thought it was a great idea, to where we are now, we've come an enormous distance, and we'll talk more about that next week.
Okay, that's great. Thanks very much.
Thank you, David.
The next question comes from Jim Schneider with Goldman Sachs. Please go ahead.
Good evening. Thanks for taking my question. When you think about the composition of NBMs you've already signed and the ones you may intend to sign, how are you thinking about the mix of desired customers you'd like to see across edge, hyperscalers, AI data centers, and so forth? And maybe can you talk about whether you're pursuing additional agreements with large hyperscalers beyond the ones you've already signed?
Yeah, Jim, we're open to signing deals with companies that really meet the criteria that we talked, right? One is they need to be customers that are highly strategic, that they really value our products, and they're creating amazing products with those. We want customers that are looking at several years, ideally 5 years of agreement with growth, year-over-year growth. That's very important, because every year we're producing more bits as we introduce new nodes. So we want customers that grow with us. and we want attractive financials. So that's the criteria, but we're not close to any segment. As I mentioned, we signed deals with customers across data center and edge, and we feel great about that. In terms of the hyperscalers, I'm talking about specific agreements. I think it's not in our interest to be disclosing specifics about contracts, but we feel great about each of them. They are, as David said, long-term relationships that are getting to a level of details that we've never had before, from a technology, from a commercial point of view, and we believe that these relationships will last many, many years.
So, Jim, just a few more comments on that from my perspective. So, first of all, we really started this journey just two plus quarters ago. Here we are with a little bit more than 50% of our supply for fiscal year 27, which we're a month in now, is already committed. We understand the financials. We understand exactly where it's going. We already have POs for the year from those customers. In FY28, that steps up to 2/3. Roughly 2/3 of our supply is already committed. We understand what the mix is. We understand what the economics are. So we feel like we've just made incredible progress here on taking. A year ago, we were talking about visibility in this business of 3 months, and now we're talking over 4 years of committed financials and understanding the mix and working with, as Luis said, some of the most enviable companies in the world. So we feel really good about where this is at, and we'll continue to talk to customers. I think one of the most interesting dynamics is some of our biggest customers are already coming back and wanting more, right, from just what they thought they needed 3 months ago. It's a very, very robust demand environment, especially in the data center. So we feel good about where we're at. But we're getting a lot of the portfolio spoken for at this point, and we'll be selective from here about how we add to it. But we're definitely still in deep conversations with additional customers.
Thank you. And then could you maybe address capital allocation at a somewhat more holistic level? I mean, it's great to see the buybacks you've already executed in terms of the authorization, but how should we be thinking about your ability to do sort of more programmatic buybacks on sort of an ongoing basis, and maybe talk about the idea of a dividend if you've considered that?
Yeah. So our priorities continue to be the same as what we've talked since day one, which is to first continue to invest in the business. And although that's a generic statement, you've seen us do that, right? Through our OPEX, through our CAPEX, through investments in Nanya, through our JV extension. So we continue to make our company more robust and more durable over time in any scenario. So we'll continue to do that, and I've talked about some of the numbers, some of the requirements to continue to invest in the business. Priority number 2 that we've talked, which is frankly completed, was to get a good cash balance, which we've done, and to get rid of our TLB, which is also done. So that priority number 2, we feel very good of where we are. And then really our role as a company is to return cash to our shareholders. We believe that at this point in time, and things may change, as time goes on, we believe that the best way to do it is to return cash to investors via share buybacks. So we started that journey very quickly in last quarter, and we'll continue that journey, and we'll keep you updated. But that's the form we believe it's better for our shareholders, more tax efficient, and probably the right thing for us to do at this point in time.
Thank you.
Thanks, Jim.
The next question comes from C.J. Muse with Cantor. Please go ahead.
Yeah, good afternoon. Thank you for taking the question. I guess 2 questions. First, with pricing up modestly sequentially, can you help me understand why gross margins are guided lower? And then bigger picture, the challenge for semi investors is moving less of a focus on margin and EPS revisions, but rather buying into the durability of this cycle. So can you focus on why you're so confident in the securities of NBMs and that today's supply is limited and that will drive a durable and elongated cycle? Thanks so much.
Good question.
Yeah, so I'll start and Luis can add on. CJ, I think you answered your first question with your second question, which is we're focused on multiple things here, not just one. As durability is a big piece of it. We want to get, a fair return for our product. I think, mid-80s gross margin, I would characterize as a fair return. And then we want to increase visibility and durability of the franchise, right? We want to get this kind of, boom and bust out of it. It doesn't work for anybody. In 23, we were having very different earnings calls than we're having now. And, we want to get more consistent and deeper relationships with our customers so we can plan better and they can plan better. And so, we're executing what we said we were going to do last quarter. We're committing supply to customers that are willing to commit for years in advance at the economics we guided to last quarter, which Ben said earlier. We guided to about 80% gross margin. And then, the rest of the portfolio floats. And then there's, all kinds of things that happen in their mix and all different kinds of things influence it. It's a, fairly complicated business. So when you put that on top of half the supply is committed for FY27, you get to kind of the numbers we're talking about, which we're thrilled with, quite frankly, because the amount of, the operating leverage, operating profit and free cash flow that drives is very substantial. And again, we'll go into why that's the case a little more next week. So why do we have conviction that these, customers are going to hang in there with us? There's lots of reasons for that. Number one is we put a contractual structure in place where we align our incentives. They're making financial commitments to us that if they don't follow through on their commitments that, I think $16.5 billion in aggregate would flow to us on our balance sheet. We don't ever expect to see that money, quite frankly. It's just to align interests. But if some black swan event happens, companies have to do what's in their interest and maybe something happens. But more importantly, we're dealing at a very different level with our customers than we were a year ago. I mean, we are literally talking to the CFOs, the CEOs of the largest companies in the world. This used to be, quite frankly, just a supply chain conversation every quarter in a, price negotiation 7x24. The business has turned into a highly strategic, Sandisk has incredible products that allow them, our customers, to build incredible infrastructure to serve the world with, things like inference, which is, we're just getting started on scaling. So it's, as somebody that's been in the technology industry for 35 or 40 years now at quite frankly, a very high level, the level of customer engagement we have is as high as any technology franchise I've ever been a part of. It's incredible. And so we believe that, we have pivoted to a highly strategic supplier to our customers. Their demand continues to grow. I think one of the more interesting things, again, I think I said it before, we've already have customers coming back for the second round of NBMs, a quarter in. And so that gives us an enormous amount of conviction that this franchise is set up for the long term. We have over 4 years of visibility now at economics, which are extremely attractive. And, we're really looking forward to, executing this business over the next several years.
The next question comes from Joe Moore with Morgan Stanley. Please go ahead.
Great, thank you. You talked a little bit about gross CapEx coming up a little for the BiCS8 and BiCS10 transitions. Can you just talk about how you think about that and the fact that, the guys who also make DRAM seem to be focused more there? Any thought of spending more to accelerate those technology transitions, or just how should we think about your decision-making process on CapEx?
Yeah. So Joe, basically we continue to be committed to grow bits mid to high teens, right? And we're spending to that level. The reason why our dollar increases from one year to another is because obviously as you transition from one node to another, you will first take the easiest right, or the cheapest transitions, and then you would go on and do the more expensive ones. Particularly when we had, underutilized the fabs in the prior year, we had some tools that could be reused, and we were in a good place on that spending. So we're very good. We continue to execute the plan that we had. We believe that's the right plan to do it. That allows us to provide the bit growth that we believe is sustainable in the market, and we haven't changed that position. Now, this year, as I mentioned in my prepared remarks, it will be a little bit lower. I mentioned mid-teens as we continue to build capabilities for the new business models. We need to build a little bit of inventory just to make sure that we're always delivering on time. So that mid to high teens, which is our ongoing number, will be a little bit lower for 2027.
Okay, so if we think about a $500 billion kind of industry number for next year, do you think you would, between the different puts and takes, kind of hold segment share relative to that?
Yes, that is correct.
It's always our goal, Joe.
Okay, great. Thank you.
Thank you.
The next question comes from Carl Ackerman with BNP Paribas. Please go ahead.
Yes, thank you. I have two related, so I'll ask at the same time. Consumer revenue is down a bit this quarter. Is that allocation choice or demand driven? And how should we think about the dollar commitments of these contracts relative to the perceived consumer customer demand through 2028? In the absence of LTAs, how do we gain greater visibility on end market consumer demand? Thank you.
I'm not sure if I got the last portion of that. Would you mind repeating that one, Carl?
The consumer one first, Carl, and then we'll come back to you. So,
sure.
Consumer is a business that it doesn't move at the pace that the transactional markets move at. It's kind of an interesting business because in normal times you can move pricing and consumer around much more quickly than some of the other markets. But in these kind of markets where the other ones are moving so fast, it's hard to move the consumer up as much as possible. So there's no doubt we're seeking at where is the right equilibrium point for pricing and the amount of product shipped and all these kinds of issues in consumer, and that's a little longer process than in some of the enterprise markets. Luis, you want to add anything to that?
Yeah, I mean, as you can imagine, prices on the consumer market have also come up, and there has been some impact on the TAM itself. We're very happy with that business. It's going super well. We're very happy about our market share within that market, and we continue to be committed to drive that business. Do you mind going through your second question, Carl?
Yes, Luis. I was asking, you gave some very substantial numbers with respect to long-term agreements across your customer base. And I was wondering how we should think about the dollar commitments of these contracts relative to the perceived consumer customer demand of these LTAs. And in absence of LTAs, how do you gain greater visibility on end market demand for consumer? Thank you.
Yeah, so the LTAs or the new business models are not related to the consumer business. If you are questioning whether the new business models were taking bits away from the consumer market, is that what you are asking, Carl?
Oh, no.
Yeah, I think we feel very good about the demand that our customers with NBMs have. Otherwise they wouldn't be increasing their demand to us just a few months after they sign their commitment. So if the question is on their demand, I feel very good about their confidence, their conviction on their demand, as these numbers, I think they're actually being conservative as they make commitments to us as they come in and increase their numbers, just a few months after signing the deals.
Great, thank you.
Thanks, Carl.
The next question comes from Aaron Rakers with Wells Fargo. Please go ahead.
Thank you, guys. This is Michael Svednoff on Aaron's behalf. I wanted to ask, it sounds like you guys have significantly improved your visibility. You keep mentioning, greater than 4 years. So I'm curious with that and kind of your thoughts on supply growth, when do you see industry supply-demand converging? And kind of how has that view changed relative to 3 months ago? Thank you.
Well, I mean,
Convert to every quarter.
yeah, I mean, industry supply and demand converges all the time, I guess, right? I mean, that's the way the market works. I think if you're saying is supply going to increase so everybody gets everything they want at the price they want, that's a much more complicated question. Look, I think this is really, there's a lot into the question you're asking, and I don't mean to make light of it at all, because we take this very seriously. And this is really a big part of the NBMs. I think the thing that we've struggled with is to understand what is demand 5-10 years from now. And when the business is transacted on a quarterly basis, it's very difficult to do, and it's very difficult to get wrong. And if you get it wrong, the implications are kind of tragic, right? We saw that in 23. Right now we're seeing, maybe people didn't anticipate that things were not going to be as available as they thought, and the market's reacting to that. I am actually extraordinarily optimistic that the market is reacting at an incredible pace. I mean, again, if you just think 4 quarters ago, this whole market was transacted quarterly, and now we're sitting here saying we have 4+ years of visibility, and we have customers signing up for 5 years of demand. That is exactly how supply and demand is going to get matched. It's not going to get matched at, quote, the industry level. Like we keep saying industry this, industry that. It's going to get matched with customers and suppliers having deep discussions about supply and demand, and how do we get those aligned. And I think we've taken 2 very big steps down that path over the last couple of quarters. As I said earlier, the level of strategic engagement with our customers, it is difficult to comprehend how advanced it is versus where it was 2 or 3 quarters ago. So I think we're making incredible progress on this, and we're going to follow our customers. That's the simplest way to kind of run a business, right? We have customers. We now have relationships with 8 customers that are some of the, they're just incredibly large customers, and they're going to give us visibility of what their demand is. As I say sometimes, they need NAND, we build NAND, right? It's a match made in heaven. We just need to get the economic model figured out, and we are making extraordinary progress on doing that. And I expect that that's going to continue, and we're going to continue to have those discussions, and that will inform our investment decisions.
Thank you.
The next question comes from Blaine Curtis with Jefferies. Please go ahead.
Hey, good afternoon, guys. I had 2 questions. I want to ask on Edge. Obviously, the PC smartphone markets are, probably going to be down for most people in the back half of the year. How are you thinking about that segment? And I guess, can you just speak to the strength you're seeing? I know it's broader than just those end markets. So what is going well, and how do you think about, the markets that'll be down over the next few quarters?
Yeah, I mean, they're great markets, first of all. Again, I've said this before, this is one of the great things about the NAND business. It's got tremendous diversity of markets. Smartphones, PCs, very, very important. There's no doubt those markets are adjusting this calendar year. And we said it in the script, we expect them to stabilize next year. But we see units down mid-teens for both smartphones and PCs this year. But we still see, in smartphones, we see average capacity up significantly, mid-teens, and in PCs we see it flat. But then next year we see, units flattening out in both businesses, both markets, and then average capacities going up. So we see the market adjusting this year, and then next year return to overall exabyte growth across both. So again, the market's adjusting to kind of the reality of where the way the industry works now, and I think it's happening pretty quickly.
Thanks. And then I just wanted to go back to a prior gross margin question. I'm trying to understand, the margins are down modestly, but pricing's up. I just want to understand, is it the impacts of these new business agreements that's kind of capping the leading to the modest growth in ASP? And then even with that, is there any other factors that are contributing to gross margin in September?
Yeah, I would not assume that our new business models are a drag on gross margin. They are good margins. If you look at where we come from, right, the last 5 quarters, we've expanded gross margin every single quarter, starting with 22.7 all the way to 86.5. So we feel that we're driving gross margin. We believe it's one of the most important metrics to drive the financial health of the company. Now, if you look at some of the reasons on the math that you're questioning, right? I mean, there's some mix. There is the high end of the guide is 85, right? And so it's a little bit off versus what we just printed. And we're making some prudent assumptions, if you wish, on component cost and other things. And when we factor all of that in, we believe that the right guidance to give you is somewhere between 83 and 85%. So slightly down, slightly up from what we printed this quarter, driven by all these factors.
Thank you.
We ask that you please limit yourself to one question. The next question comes from Wamsi Mohan with Bank of America. Please go ahead.
That was kind of timely to go to one, but
I mean, Wamsi, you got stuck with the one question, man.
Well, I will ask a two-part single question.
Okay, there you go.
So you have an industry forecast here of the NAND industry growing to $500 billion in 27 from $300 billion in 26, and we know that your bit growth is really not meaningfully accelerating for the industry. So just as the assumption that there is going to be any price normalization that we expect in 2027 or not, that's like the first part of it. And the second part is, in that growth of the industry, is your expectation that you would outgrow the industry in line or undergrow the industry as you think about that market growth? Thank you so much.
We want to grow with the market. We plan to grow with the market. Look, I mean, Wamsi, we're transitioning our business into a more predictable business. We're working on pricing and predictability and duration, and so we expect to grow with the market as it goes and increase our visibility. We continue to see very robust demand through the end of 27 and into 28. I mean, customers are giving us demand signals for all the way out to the end of the decade at this point. So, I don't know what more to say about it. We're going to grow with the market, and as we grow with the market, I think we're turning in market-leading profitability. And we've got our bit growth plans. As Luis said, we're going to be carrying a little more inventory as we go into these NBMs, which will have an impact on growth in the near term. But we continue to see a very robust market, and it gives us this opportunity to both continue to drive significant profitability of the business and increase the duration of our visibility very significantly.
Okay. Thank you, Dave.
Thanks, Wamsi.
The next question comes from Asha Merchant with Citi. Please go ahead.
Oh, great. Thanks for squeezing me in here. David, I think in the past, Sandisk has talked about, the KV cache opportunity. Can you just remind us, how you're thinking about it? Clearly, agentic AI is gaining a lot of traction here. I'm here at FMS, and seems to be a lot of discussion around there. Has your views or dialogue changed over the last quarter as it relates to and how you're thinking about this KV cache opportunity into 2027 and beyond? Thank you.
Yeah, it continues, Asha. It continues to mature, I would say, and that's with staying close to the customers because it's use case dependent on how much KV cache is going to be, how it's going to be used, how much NAND is a part of that equation, how do you configure the system, and we continue to do an enormous amount of research in this area, and you'll hear more of that next week. But we just continue to get more optimistic on the requirements for NAND as as AI gets more sophisticated, models get bigger, context lengths get longer, and then agentic is just a big multiplier on top of that. So we continue to get more bullish on the requirements for NAND. And again, this is why I'm going to keep going back to the same theme. This is why it's so important to stay close to our customers, because I am a very, very big believer now that the customers are driving the requirements in this market. It's not what the suppliers are coming up with on different architectures and those kinds of things. Now we're talking about scaling inference globally. And that is very, very difficult. And to do that and understand exactly how that system is going to work, you need to really understand the use case. And that's different for each provider. So again, why, it's a reason why we're staying so close to our customers, why we're increasing our visibility, because we're going to need to stay very close to those architectural discussions. They're evolving very quickly, and the demand continues to get stronger. Again, witnessed by, we have customers coming back, after only one quarter and wanting to increase their demand for the next 3 to 5 years based on what they've learned in the last quarter. So it continues to be, it's quite a complicated calculation. We're going to try and demystify it a little bit next week with how we think about it. And it continues to be a very strong story and getting stronger.
The next question comes from Vijay Rakesh with Mizuho. Please go ahead.
Yeah, hey, David and Louis, just a two-part question here too. When you look at the BiCS10 and high bandwidth flash, wondering if you're seeing any price premium on that, and how should you look at the price premium versus conventional NAND, I guess. And then you mentioned that 2027 growth, you should be in line with industry. What would drive the upside for you, I guess, versus the industry growth? That's it. Thanks.
I think it's a little early to talk about pricing on some of those nodes just yet, right? And some of that technology, but we'll keep you updated on that. We're certainly very proud of the technology. BiCS10 is a great node. We just announced it, I think, last week or last couple of weeks, and it's been in development for a long time, and it's great. Again, Alper's going to show you more about that next week as well. In high bandwidth flash, we continue to have deep engagements, both with cloud customers and device customers, about using that technology as an inference platform. Look, we grow, BJ, we grow through nodal transitions, right? I mean, our technology is so productive. We can grow in excess of the market rates we're talking about just through nodal transition. So that's the way we grow. If we're going to speed up or slow down nodal transitions, even that still takes a significant amount of time, but that's something we always look at and allows us to kind of always stay in line with where the market's at.
This concludes our question and answer session. I would
Thank God. Oh my gosh. It's exciting. The market doesn't care. They couldn't have made a more exciting market more boring. I mean,
Look, here's the problem with Sandisk, okay? I don't know if anyone noticed, but every question was, when is the cycle ending? Every answer was, we don't know, but for now, there's a lot of demand. And this is why the memory trade is really scary to me. Because at the end of the day, if prices peak or supply comes in, the trade is done. I mean, these names will fall like a rock when that happens. So you're betting on the cycle not being done for a while, which I agree with. But when Sandisk was 40, when Micron was 300 and 200, that's when the longevity of the cycle seemed like it had alpha in it. Now it's kind of like, all right, we know the CapEx is not stopping, but the companies have grown to multi-hundred billion, in the case of Micron, trillion in Samsung, SK Hynix, $1 trillion market caps, that for them to go to 2-3 trillion, like for Meta, Google, Amazon, Nvidia, to get to those multi-trillion, you need sustainable earnings growth, which is what was basically the theme of all the questions. It's like, how do we know this is durable, sustainable? And they talked about their long-term agreements and all that stuff. And again, I think a lot of that will be sustainable and durable for, the coming years, but the market looks forward and tries to find out at least a year and a half in advance before things start peaking. And so I don't know, man. This is the problem with the trade. Doesn't mean the trade is bad, but the stock should not be down 7% after hours on what were absolutely incredible numbers, unless sentiment around memory in and of itself, which does bleed into other parts of the semi-stack. It doesn't just affect memory. That's an issue, man. That's an issue I don't think can be ignored. Do you feel the same, Tanner, or you have a different?
Well, I mean, this is not being priced as a traditional company growing at this rate. Not only are people not pricing in 370% year-over-year growth on revenue, which is what we're seeing here, but the forward PE on this company is still less than 10 times, right? So while I do agree that there is going to be a boom-bust cycle, it almost is being priced as if that's going to happen. So if we're going to continuously see this market grow from 200 billion or even less than that to 300 billion to 500 billion, and data centers make up a larger and larger share of that overall spend, the cycle does seem longer than I think what people are giving it credit for. And no, of course, they're not going to come out and say, hey, this is whenever the cycle ends or something like this. But ladies and gentlemen,
we have a guest.
We have a guest.
Okay,
the great and powerful couch investor.
What's going on, guys?
Neil,
before on all the earnings call fun.
I was watching Spider-Man, seeing if this $1 billion box office movie was really worth. I'm not going to tell you yes or no, but I'm just going to say that
good?
It's good. Is it $1 billion in a week good? Probably not. Probably not.
Well, you are doing something fun versus listening to the Sandisk call. Look, the thing is, Tanner, I agree with you. The forward PE is priced inappropriately for the level of growth that they're putting up. I don't think anyone can look at those multiples and say that's wrong. But nonetheless, the one question that almost explicitly, I mean, literally, he was like, is this boom and bust? I didn't like the CEO's answer. I don't know about you guys, Tanner. I don't know if you remember it, but the CEO did not answer that. And I don't blame the CEO because it's kind of not in his control. All he can do is continue to grow. And, he said, I think 80% gross margins are fair. He was kind of saying it as a joke because it's like, dude, like we have 80% gross margins. The problem is the market's like, yeah, but like you've never had that. And that's probably not sustainable, which is why every question came down to pricing, supply, and overall durability. And so I agree, the multiple should be higher for all the memory names. And as a trade, that makes sense. But there's a lot of people that have a lot of gains on these names. And if the market starts to really panic on the sustainability of it, granted, the TAM is growing so massively, I think that's where you get the fear. And for the people saying, what about NVIDIA? NVIDIA has a moat. They're not selling a commodity. Whether you like it or not, memory is a commodity. It's just the supply-demand imbalance is so massive that there's 80 to 85% gross margins on these memory companies. You can't just build Vera Rubin. There's not another person that could do that outside of NVIDIA. So now NVIDIA is going to need a lot of memory. So if NVIDIA is growing, then theoretically the memory company should be growing. But if there is just because you're selling a lot of cars doesn't also mean the price of oil corresponds with the margins of cars just because cars use oil. So I don't know. I feel like, once again, these stocks are undervalued. And if we get a raging bull market again, S&P 8,000, they will go up. But the fear after hours, once again, tends to be from these lack of meaningful answers that I can't even blame the management for around cyclicality and durability of their growth.
So the TLDR, since I didn't listen, was we are growing very fast, but we don't know if that growth will be here for the next 5 years, 3 quarters, a year. Well, what's the...
Well, they did make a prediction on 2027 NAND market size. They said $500 billion. In the trailing 12 months, Sandisk put up $20 billion. Now, they're not the only player in the NAND market, but it's significant expansion going from 2025 to 2026. By 2027, you're having multiples on multiples, larger market spend on high bandwidth flash and NAND markets.
Okay, so to go back to what Amit just said, it's true. You cannot have another NVIDIA in this market right now, but I am I'm not certain, but I think if you go and allow these big tech companies to go to the Chinese companies, you can maybe replace what a SanDisk cannot supply at the moment to everyone. And maybe that's the fear in the market, is that an NVIDIA cannot be replaced. And I mean, if they can be replaced, I'm pretty sure everybody would be running to the replacement right now. They've built out their ecosystem, whether it's software and hardware, with memory, whether it's a SanDisk, maybe a Micron SK Hynix, Samsung is a bit different, but in my opinion, the solution is way easier to get these types of components, to get these types of products. I mean, the fact that you can literally go today, if they're allowed, to China, to these Chinese companies and get what you need is, I guess, part of the reason why the PE will not be much, much higher for these companies. Because let's say Trump decides, you know what, Apple, you know what, other companies, you can buy X amount from these Chinese companies to ease the pressure on the supply chain.
Which it seemingly he just came out and did the opposite today.
Right.
He imposed a 15% tariff on polysilicon derivatives.
I think we need to ask ourselves, why is Microsoft trading at 25 times forward and SanDisk is trading at 5? Because as uncomfortable as the conversation is, like there needs to be a response to that. It has been months now of Micron SanDisk trading at well below the average tech PE. And it's like, what is the street? It's not like the street doesn't understand the story. I mean, it's not like the street is crazy. The stock was at 40. It's up thousands of %. Like, there is a reason for why that multiple is this discounted. And I don't know. I feel like that reason once again comes to the fear. Now, if SanDisk rockets all the way back up to 2,500, maybe Figure comes out in the robotic space and says, we think there's going to be another 10 years of memory needed because we're going to have 2 billion robots. And like, you have real evidence of that, because I know Jensen has said that to an extent, but like, that elongates the cycle, which once again, if the cycle is going to go much longer than what we all think, way more than 4 or 5 years, because again, you got to discount 2 years before the market prices it in. If it's going to be 10 years, then we have like 7 years. Then it obviously should be a $3,000-$4,000 stock just based on where that future growth is coming from. But if the market doesn't see that happening, then I don't know if that multiple easily comes back.
Because the market is on, I'm not even going to say it's on the other side of the trade, because I mean, this thing has gone up like a rocket over the past 12 months, 18 months or so. But the market is thinking about, okay, 2027, you will have a lot more supply coming online. Right? Everybody is going to increase supply, whether it's a SanDisk, a Micron. Mid-27 is where Micron starts to really expand the supply. And so let's say we are in 2028 and everyone across the board has managed to increase the supply. The demand can still be there, but by then, all of these players, I assume they will be optimizing for efficient memory use, which might mean, yes, the demand might be there, but might not be as big as previously expected. I'm just trying to speculate. I own Micron, Tanner, I own Micron, you own Micron. So this is where the market is now. It's okay, maybe revenues will continue to grow, but whatever flows to the bottom line might not be as much as today, a year from now, 2 years from now. Does that mean they have to trade at single digits PE? That's
Yeah, I mean, even then, though, whenever you look at what Wall Street today, not what they will revise for tomorrow, is expecting net income just for SanDisk to continue to expand. And they've been very conservative on this name, I think, for the most part. Like, the stock had appreciated so quickly, but if you look year over year, they went from doing negative 23 million in net income last year, this June quarter, to this quarter doing 6.9 billion. Negative 23 million to 6.9 billion.
But Tanner, the stock is also up like 30x. It's not like that hasn't been
of course. But what I'm saying is, if this is the new paradigm and they are putting up, as Wall Street's expecting, $8, $9, $10 billion of net income per quarter going forward, you don't even need margin expansion. Let's take a 10 forward PE, and the cycle continues to get pushed out 1 year at a time, and they continue to deliver on that expanded amount of growth. Well, then trade it at a 10 times PE, be a little bit cautious on the side, and let the earnings be able to buy back stock, give dividends, M&A, whatever you got to do. That alone will appreciate the stock going forward.
So that's another question I have. I'm curious if your guys' take and the chat's take. Are buybacks really the bull case here when the cycle starts to peak?
Are buybacks the peak?
No. You just said they can buy back their stock. Is that why you buy Sandisk for the next few years? Because they're going to just do a bunch of buybacks?
Well, no, I think that you hope that an investor buys it before the company has to, but it's a good backdrop of saying, hey, if no one buys NVIDIA, then NVIDIA will buy NVIDIA.
Yeah, but what I'm saying is for a supplier of a commodity to have excess cash more than they know what to do with it, because this is the ironic part that no one's mentioning about the buybacks for the memory companies. They can build new fabs and invest in growth. But then that messes up the supply. Like they're in this game of chicken and egg where like if they build more supply, the demand fizzles out or at least normalizes.
I think so. So Elon talked about this on the SpaceX call. You know, I think a lot of people, whenever they talk about supply coming online, that they think like it's like 5x supply coming online. And Elon said there's a 20% increase in supply. It's not going to change the unit economics. Like,
no, but a 20% increase would definitely change the street's expectations across the board.
Yeah, to the upside. There'll be 20% more
prices.
sales.
Yeah, but prices would come down.
Yeah, but do you think that's proportionate? That the margins come down 20% as the supply comes up 20%?
No, it wouldn't go down 20%. But the point is there would be like that happening in the chart, which would start to get investors to be scared. So then Sandisk and Micron will come out and say, well, we're buying back our stock. So our EPS isn't going like that. Our EPS is still going like that. And then investors are going to be like, okay, but you just don't want to invest more in supply. So you're going to save the stock by buying it back. I just feel like it's different when Apple buys back their stock because there's something long and sustainable there versus Sandisk.
I agree, but I do still think that it's a good benefit. I think there was a report from, I don't remember the exact bank. It was Morgan Stanley or one of these financial firms that said that once Micron is actually able to buy back stock, right now they're not allowed. By 2020, they could buy back like 40% of their outstanding shares. This is not a 5% buyback. They're talking about buying a substantial percentage of the outstanding shares. That does artificially, or however you want to phrase it, increase their earnings per share. Your ownership in that company drastically increases. And so they can buy back as many fabs, buy as many fabs and increase supply as they can, whatever they believe is good for their business overall. But buyback is still a good lever for these companies that are making way too much cash that investors don't believe will be sustained over time.
I don't disagree with that. I just think perceptually, we've never had memory companies do this level of buybacks. I mean, you're basically talking about buybacks in the hundreds of billions. The only company that we've seen do that at scale is Apple. And like Apple is a bit different than a supplier of memory. So I don't know, like, yes, it will keep the EPS up and theoretically your ownership will increase because the shares will go. But like after those buybacks, what's left? If all the supply comes online and prices have peaked, what are you buying these memory companies for? You know?
Well, I don't think that you should buy it if you believe that there's going to be a significant drawdown in average selling prices and that, you know, over time that their earnings will collapse. I think the people who are buying it at today's prices need to believe that this is going to sustain for multiple years. That we are looking at like a shift in the way that we price memory because our needs are higher. That's how you have to.
Right.
Do you think Micron will still have close to 85% gross margins 12 months from now?
Well, I mean, yeah. 12 months from now, yes. 24 months from now, maybe not. But will it be high 60s, low 70s? I mean, I would still be extremely happy with that. That's, you know, almost NVIDIA margins.
Correct, but it would still be a big drop, which the drop will be perceived as, but the dollar amount that will flow to the bottom line is probably still going to get bigger just because the revenues increase.
Right.
Way more. But I don't know. The fear is probably that margins will peak. So the market thinks profitability has peaked, everything peaked, blah, blah, blah. But I do still think that revenue-wise, they can still increase. I mean, what's his name from Grok with a Q? Jonathan Ross talked about the fact that, right, if these memory players cannot figure it out, the industry will figure it out. which
Yeah, but like, is that why Elon just signed long-term contracts with Micron?
you can sign long-term contracts with Micron to be safe and still work on a solution to make sure that you don't need too much memory to keep ordering more and more in the future at super high prices. Could be, but yeah, it's a question I guess we will still have 12 months from now, right? Do these companies deserve a 20 times PE or something like that because they're growing super fast or not? Will they get it? Will they not get it? I don't know. For now, even without getting it, they've been going up like crazy over the past 12 months. So it's not like they need it. And I mean, other than buybacks, I do wonder what the heck they're going to do with all that cash.
I also think there's a perception thing. So if Micron had a 25 times forward earnings right now, which is similar to tech companies that they are growing way faster than, stock would be worth $2 trillion. I think companies can get to high market caps, but for companies to stay at high market caps, I mean, there has to be a fundamental positioning of their story over a long time that people really buy into. I think this simply comes down to if Micron gets to 2 trillion, Sandisk gets up to 1 trillion, then you have to believe this memory demand from a price peaking perspective, from a supply demand imbalance perspective, and then from a broader like AI legitimately, Jensen said last week, the semiconductor industry should 10x. If that happens, Micron could be like a $5 trillion company. Like if that really is what takes place. But every time you get a little bit of data out there into the world, last week it was from Asia, Sean Kim from Morgan Stanley saying, look, our checks are showing that these prices are going to stall out by end of 2027, early 2028. There will be more supply. Immediately, you ask yourself, am I going to pay $2-3 trillion for this company at this moment of time? And by the way, it's okay for things to be a trade. Like some things are not meant to be investments. They are meant to be trades. And these have been amazing trades. And I think there's more juice in the trade. Don't get me wrong. Micron probably should be $1,500. Sandisk probably should be $2,000, which means the upside here is still pretty damn good if it happens within the right time frame. But if the street just doesn't let it get back there for whatever reason, these fears that we talked about, which might not be that meaningful as the overall sector grows, then I think that's why we'll see the prices kind of stay at this level.
Yeah, I think it, like you said, it's okay to have this company as sort of a speculative position. I don't even own Sandisk. I own Micron, but this is not a NVIDIA level position for me. It's much smaller of a name. And it's okay to not have the exact answer. Like Sandisk is being priced as if people do not know what's going to happen next. There's a reason why Costco holds the forward P that Costco does and why Sandisk holds the forward P that Sandisk does. And you could likely make money on both or lose money on both, but
This is what Gavin Baker just came out and said about the memory stocks.
Let's just say Google breaks an LTA. There's an oversupply. I'm making this up in 28, 29. They break their LTAs. Well, if they're breaking their LTAs, it probably means your oversupply, prices are coming down, and then capacity naturally contracts. Well, like, what do you think is going to happen to Google's allocations? And then this is a cyclical industry, and oversupply is followed by undersupply. What do you think they think is going to happen to their allocations next time? So I just think, given that this is like the axis around which kind of everything is revolving, man, like you might blow up your entire business and your franchise by breaking an LTA. And that was never the case before. Apple, who cares? They're buying, they don't have a competitor. They're overwhelmingly the largest purchaser. They know they can do whatever. This is, going back 3, 4, 5 years. They know they can do whatever they want with no consequences because their volume is so big, that even if they like super screw Hynix, Micron will of course take them. This is just different. You have at least 4 players. Then you have all the startups. You're an investor in Etched. And if you break an LTA, and that they just say, okay, fine. You know what? Great. You broke the price agreement. We're going to break the volume agreement. And, screw you. We're going to give the volume to your competitor. You just lost share, So I think I think NVIDIA's dominance, I think, is
what a terrible time for that to cut out.
I think it's a fair argument, and that's why the LTAs are very strategic. And I don't think the hyperscalers are going to break them unless the hyperscalers think they can get better pricing. Like you break your long-term agreements if you think, dude, why am I paying 80% margins to Micron here because I could be getting 70% from SK Hynix. So so it's like, but again, that depends on the nature of the actual supply-demand imbalance of the entire memory sector. So I just feel like to own these names right now at these low PEs, you have to be very confident the cycle has not peaked, or that the perception of the cycle is not peaking, which I think we can kind of say, yeah, it hasn't, because there's a lot more room for AI to grow, which is why these stocks are at very attractive valuations. But once again, if we're trying to make sense of why the prices are not reflecting what they obviously should reflect if you were to pay a regular price to earnings, not even 50% of a regular price to earnings, not 5 times, but maybe 10, 12 times, these stocks would double. And that's just not what's happening right now.
And Micron is still expected to 3x revenue over the next, fiscal 28, they're expected to generate over $260 billion. They've done $90 billion over the last 12 months. So I don't know, it's a very, very interesting story. And again, like Tanner said, you don't have to make these types of names 20% of your portfolio for it to actually make sense for you.
Yeah.
Yeah. I don't think there's going to be a lot of LTA breaks. I didn't really think about that from Gavin's perspective. Like, these companies are playing multi-generational games. They're trying to win way past what the CEO's timeline is. You're not going to be breaking your LTAs. You have a long relationship with Micron way past this initial cycle. That too, I would imagine that a lot of these are take or pay contracts, and you're going to be paying with or without taking the chips regardless. So Sandisk is going to be pretty insulated, and so will Micron.
Yeah, and theoretically, again, to your point, if supply is growing, demand might just grow even further than what supply is growing. So that keeps the dynamic in place. Look, NVIDIA's results will be pretty telling for how much the overall semiconductor index demand continues to persist. And once again, if there's not massive innovation in memory over the next couple of years, then theoretically, those long-term agreements should be followed through. Those margins should be somewhat stable, and these stocks should ultimately re-rate higher. So I don't think it's a question of anything that's bearish around the actual fundamentals of these companies. It's just when we're trying to analyze why the stock market is not giving them any premium compared to what they had even a month ago, it goes back to the boomer bust cycle being fake or real. And maybe the market switches their mind next month and we get back to much higher premium.
You know that NVIDIA could potentially post 100% year-over-year growth?
They will post 100% year-over-year growth. And I called this 6 months ago. It's going to happen. Don't even put it into the sphere that it might not happen.
No. I'm just saying it's probably going to happen because the estimates are at 96.5% year-over-year growth. So it's crazy to think that they can grow 100% year-over-year, post over $90 billion in revenue.
Yeah.
Do you think the stock will go up if they do that?
Depends. If we're at 250 by the end of August, maybe not. If we're back at 200, probably yes.
Yeah.
What happened with Google today? What's going on there?
Demis
Some
stepped
people
away.
jumping ship.
Yeah. Demis, I think, is on the board now, or he's an advisor, but he's not leading DeepMind anymore.
I don't get that, dude. That's weird. That guy loved his role. And Nikita stepping down at X, that's also weird.
Mm-hmm.
You had a lot of high profile people changing the roles. By the way, the CoreWeave director sold 13 million of stock today as well. Also, Jane Street owns 5% of Sandisk.
Yeah.
That was disclosed after hours. So honestly, all this theorizing we're doing, it's probably Jane Street just messing around after hours. If we were to give a real answer, it's most likely that fund just playing with the stock review.
Did you listen to that song I sent you, Amit?
I did. It was quite a good song.
Be honest, right? I feel like you're lying to me. Did you listen to it?
No, I listened to it. It was good. Like, it got me hype.
Are you doing
I
that
would
thing
listen
where
to it
you
again.
interview people and you go like, "Ah, that's a good movie"? Are you doing that?
No, genuinely, I heard the song last night. It was good.
All right.
It was a good song. I prefer Drake, but
okay.
But is it another Green Day type of thing, or is it?
No, it's like it's another rap song. It's like a hardcore, heavy rap song. It was a good song.
No.
Just wouldn't listen to it as much as Drake. Trump, we are talking with Iran. Let's see what happens. I'd rather make a deal. We are talking. Let's see what happens. We're taking a lot of oil from Venezuela. Iran respects us. Iran cannot have a nuclear weapon. I would rather make a deal with Iran because I don't want to kill people. Iran called me and said, please don't do it. They respect us. We love Elon.
Is this a tweet from April, from June, from May, from July, or from 5 minutes ago? Which
it's a summary of his campaign speech in Nevada just now.
It's copy pasted.
It sounds like he's been saying this for a long time, but okay. Weird after hours. Applovin, little recovery on that one, but still down pretty bad. Dave down 15, Applovin down 16, Sandisk still down 6, Figma, I don't know what the hell they said, down 17, Fluence down 25, Zillow down 8, Symbotic down 5. I mean, the only thing that's up after hours is Oxy, Redwire, Melly's down 4, Dutch Bros down 12. All of these were up 7 to 8% at the initial reaction. Fastly went red. Chime, Soundhound, and Oxy were the ones that survived today. Axon also down 7.
I looked through Chime's quarter. It looks great. Accelerating growth. New customers coming online. It's essentially a it's like a SoFi for non-affluent people. That's my polite way of saying it. And they're growing very well.
I assume Mercado Libre is down purely because margins are down because they're growing like crazy.
Correct. Yeah, growth was insane. Gross margin fell. Net income margins fell.
Okay, the usual.
The usual. And for anyone that doesn't know, the opportunity for them to juice margins is their call. The day that they want to increase margins would just be, okay, let's turn down the gas a bit, and their earnings would skyrocket. This company is doing very well. Mercado Libre.
Oh, Mercado Libre. Yeah, 100%. Yeah, a lot of these names are executing very well. It is August. We had 2 green days to start it. August tends to be a little weird. Would not surprise me if we rebound tomorrow, but also not surprise me if we just hit all-time highs. Market's like, all right, we need to give back some of the gains that we got. But it's
the moves have been
time.
The moves have been extremely, like a week ago, we were all down God knows how much on a lot of these names, and then a week later everything's back up. We're near all-time highs, etc., etc. Leopold blew up a week ago, right? So
I'm sorry, is Salesforce down just because HubSpot's down? Is that the reason why?
I think it's down because Figma, HubSpot, all the SaaS, ServiceNow, Palantir is getting literally everything in SaaS, and Semi is quite
like a direct CRM competitor, I think.
Wow, Hub's 21. We looked at it; it was down like 7. Yeah, that's probably why.
Now Salesforce is down 5, and the chart almost looks identical. Well, obviously, one's a little bit more
ServiceNow is
drastic.
also down 4 almost.
Yeah, it's got to be it.
Yeah, but then Nebius, CoreWeaver down because of sand. Like this is, the market's going back to like everything goes up, everything goes down together, not different sector. I mean, literally everything was up today, green. Semi, software, hyperscales, everything now down after hours because of Sandisk and the SaaS names getting hit.
Yeah, but Nebius
Guys,
is still up
today's. I was just saying
50%.
today's Wednesday, so there's no technical Tuesday. I remember Jason is traveling, so. People really love their TA, bro. Everyone's like, no, it's male astrology, and everyone's like, where's Technical Tuesday? Today's Wednesday, so we'll have it next week.
Yeah.
Fluence down 30%. Look, SaaS had a good week and a half. It's got to give some back. Someone said, why did Palantir not go down as much? Do they have a flawless quarter? I think the answer is yes. Like literally, you have to have a flawless quarter in this market to not have any. I guess Figma Fastly, there's some flaw that the street found, which is why it flipped red. And that's why if you took an earnings gamble on Palantir, it really paid off, because like a 30% move was a direct result of pure flawless execution. And not every company's doing that. But if SaaS starts to take a hit, then Palantir might take a hit as well.
Applovin starting to climb back. We're still down 15, almost 16%, but I don't know what was said on the earnings call, but that one can be swayed during the earnings call. I've really noticed that. Adam's come out and talked about his predictions of the future, sort of given, non-direct guidance. and Wall Street has definitely responded to that. We'll see where this opens up, but it could definitely be very different than where it's sitting at right now.
Someone said their Axon platform had a technical issue with distributing the ads, and that has been resolved. So that also could have been resolved. Also, while we were looking at numbers, we had the one guy talk that you kind of don't want talking, and I'm not talking about Trump here. It's this guy. And he ended up saying some stuff that, once again, the market might be a bit afraid of.
You recently told our former colleague Wilfred Frost in a podcast that you wouldn't be a buyer of treasuries, you wouldn't be a buyer of equities at these levels. Why is that?
The treasuries, I just said. I like already embedded in the marketplace, there are people's assumptions about inflation. My guess is that there's a higher odds for that than the other ones. Equities, I should have said it that way. There are always equities you can buy, but asset prices are high. So stock prices, however you measure them, in the top 5 or 10% of all-time measurement. But at any point in time, a stock could be a good buy. And that's true globally. So you look around the world. No, you shouldn't speak generically about stock prices. So.
A lot of people have criticized market structure right now, levered ETFs, positioning, and so forth. How concerned are you about the proliferation of levered ETFs on single stocks?
Well, leverage ETFs on their own are quite small. So I'd say not really. But there is what I call market leverage. Prime broker leverage, hedge fund leverage, ETFs leverage, treasury arbitrage leverage. I'm double counting some of that. So the market leverage is pretty high. Now, of course, we manage it client by client, and so you've seen disasters that, people lose a lot of money, nothing really happens, they just unwind it. But when you have that, you do have a higher chance that something will disrupt the market in a quick way and people get rattled over it. And so that is a little high. And I just saw the Fed today is going to be looking at private credit. Again, I'm not worried about that systemically, but there may be some issues that the Fed should be looking at.
Going back to the leverage that you're talking about, obviously a big high-profile example of that was situational awareness last week. JP Morgan was one of the bigger prime brokers to situational awareness, which was a now collapsed AI-focused hedge fund. How much more stress do you see out there?
It's still there, by the way. It's that they unwound all that.
Smaller form.
I think that market handles that very well. But when I talk about leverage, margin debt is the highest ever been. There's a lot of margin debt you don't see because it's not called margin debt, it's called other things. So it's that kind of leverage, some hidden, some public. We see a lot of it, and it's high. It's not, I'm not going to say it's systemic high, it's going to cause a disaster, but it's high. The worst thing is if you have actual losses in the marketplace, which would happen in 08. It wasn't the leverage, it was the amount of losses that were going to be realized on mortgages.
All right. So a diamond after hours talking about excess leverage in the system. I think we got a lot of it out in July, but there's probably still a decent chunk of it left in the market. Okay, I think that's it for us, folks. Tomorrow we still have a bunch of earnings as well. In the morning, Celsius, D-Wave, Oscar, Datadog, Warner Brothers, Unity, Constellation, Peloton, Hertz. After hours, Airbnb, Trade Desk, Lyft, DraftKings, Red Cat, CleanSpark, Rocket, Texas Roadhouse, Dropbox, Instacart, Twilio. There's a lot of AAOI, tons of companies tomorrow. So
yeah,
we'll have a lot to discuss tomorrow as well.
Really excited to see what Datadog puts up, but no money on it. Just very interested for the software names.
I'm interested in Celsius. The amount of people that are saying Celsius is the buy here. One of my friends yesterday was saying, he's like, dude, this is free money at $29. I don't have a position, but I'm curious if they can reaccelerate growth. And the stock was $100 a year ago. So
Datadog is at all-time highs.
Datadog's at all-time highs. They position themselves very strongly in terms of the perception of them and software in general for AI infrastructure.
If you're a girl in your 20s or 30s, reach out to Celsius and they will send you cases for free constantly.
Did you try it out?
Yeah, well, not me. My girlfriend and her friends get sent cases of Celsius for free every month for God knows what reason. She doesn't even post about it. They and new like Alani new.
Yeah.
They just send girls cases of free drinks. So that's their
That's why the
marketing
stock is down, bro. They're losing margin on all these free drinks.
Yeah.
All right. That is it for us.
5
Thank you all
hours
for being
spinning.
here. Yo, Tanner, you did 5 hours straight. Being a champ, dude.
We're going full time now.
Amazing. All right, guys. Love you all. Thank you for being here. Again, little ugly price action with Sandisk. I really do think nothing in the call was bearish. It's just, once again, if things fall after hours, this one takes a hit. Super high beta. It was down 5% of the day. It could reverse 6% tomorrow. Memory is obviously undervalued. But just trying to analyze why the street's upset, it feels like, once again, this dynamic of cyclicality or not cyclicality will go on for a while until it's very obvious the cycle is going to last for a long time, which I feel like is obvious, but as of now, the street's not acting like that.
Thank
All
you,
right.
guys.
Thank you, everyone. See you guys tomorrow.